Vero on how to interview people, so he was barking away like crazy.
Go away.
Simon French, that's the dog here from our official surveillance Central Park studio this morning. Simon French, I look at what's going on in Europe, and I'm looking at the virus trajectories. Do the politicians understand how uniquely ugly the Italian and Spanish trajectories are when they fold this into their economic calculations?
So they understand what is going on. I think other European jurisdictions are looking at those two countries particularly and going, how many days are we behind? In the case of the UK, we feel we're about 2 weeks behind where Italy is, and working out whether what that suggests in terms of infections and the timing of the lockdown, what kind of commensurate economic support will be needed at each stage. Now, you and I spoke on television earlier about two stages to fiscal support. One at the moment to support the supply side, trying to reduce the corporate failures, trying to reduce layoffs. There will be a moment once the curve has flattened much more appreciably and we start to reopen the economy where there needs to be a second fiscal boost, and that's what the authorities should be looking at and preparing to try and boost confidence when that moment occurs.
So, Simon, you've touched on something really important, and that's the sequencing. And arguably the sequencing is already a mess, because what you need is the SME support going into the shutdown. So the SMEs are already supported, and once you shut down, they don't feel the need to do layoffs. That's already happened. And then we shut down. There's no SME support. What do they think is going to happen? They need to get checks in the post. The checks aren't in the post. In an ideal world, and I understand politics doesn't work out this way a lot, but in an ideal world, you would have had the SME support in place before you had the shutdown. And then once the shutdown started, the checks would have been in the mail. Then you would have spent the period of the shutdown thinking about the recovery package as you come out the other side. The sequencing is an absolute mess already, Simon, and I worry that too much damage has already been done, and this is just too little too late.
Look, you're right to be concerned, because what I've said from the very outset is this isn't a policy design challenge. I think central banks, treasuries around the world know what they need to do. They need to act as the insurer of last resort. What they do have is a delivery challenge here. Have they got the levers through their institutions, through the retail banking network, to get support in a timely fashion? I think, when trying to work out what the long-term legacy is of the moment we're living through, it will be the governments will have to take much more interest in the kind of transfer systems, the kind of data recording, the type of monitoring that they do of their own people. Now, that will be very uncomfortable for a lot of libertarian politicians because this is a real uncomfortable territory. But trying to deal with the support and provide the sequencing, you're right, to sneeze first and then shut the economy, that's not possible if you don't have those networks.
Simon, there's a sort of question of just how much damage has been done, and then there's a question from market participants. What can they factor into their equations going forward to determine when to buy, whether just to stay in cash at this point? And I'm wondering, as an economist, where a lot of economists are basically throwing darts at a dartboard, and that's how they felt, do you feel like you're getting more stability and having more certainty with your sense of how this all will shape up and come out the other side?
Right, so two parts to your question. On the equity market, I think the earnings side of valuations is all over the place, and we simply do not know. So it's quite difficult for people to try and benchmark versus other bottoming out episodes in terms of economic activity. We've got some sentiment stuff around approaching sort of peak fear metrics, but I'm not sure that's hugely helpful. But park that one. From the economic standpoint, though, look, I'm no fan of these quarterly annualized growth forecasts out there showing 50% decline one quarter, the 80% pullback, recovery the next quarter. I haven't met a single investor in all my years of doing economic forecasts who find that stuff valuable. But I think what we want to understand from policymakers is what is the strategy regarding a shutdown. We still don't get that from the White House.
Right.
Once we've got that strategy, we can start to forecast forward.
Right. Simon French, thank you so much. Greatly appreciate it with Panmure Gordon today. John Farrell, Lisa Bramowitz, Tom Keene, and Vet Bill. It's Bloomberg surveillance worldwide and coast to coast. The Bloomberg NJIT STEM report brought to you by New Jersey Institute of Technology, transforming computing professionals into data scientists to meet demand in this fast-growing field. More at njit.edu/Jersey City. Here's Bob Moon.
Tom, Lisa, Jonathan, good morning. Here's what's making news in science, technology, engineering, and math. Suppose you were required to download an app on your smartphone that checked out your recent travel and payment history and linked that with your national identity number and name before flashing green, yellow, or red based on how much of a risk you might pose to others. There's an app for that. It's being used to grant permission for people to leave China's coronavirus epicenter. Since Alipay by Ant Financial, the finance affiliate controlled by Alibaba Group co-founder Jack Ma, and Tencent Holdings WeChat are primary payments channels for everything from ride-hailing to e-commerce. They've already tracked hundreds of millions of users. Now they're determining which individuals pose health risks and need to be quarantined or can be allowed to use public spaces and transportation. Some people have complained, though, that technical glitches have essentially blocked them from traveling. So you want to be an astronaut, or maybe once upon a time you did? Well, consider this. What many Americans are going through right now is a lot like astronaut training. At NASA's Jet Propulsion Lab in Southern California, that's how wannabe astronaut Rachel Zimmerman Brockman is trying to think of it. She has friends who've taken part in long-duration isolation studies, which prompted her to post this message on Facebook. Attitude is everything. I'm on an adventure in a confined space with a small crew, that would be her family, for a long-duration mission with occasional spacewalks and resupply missions. And she adds, sounds like astronaut training to me. That's the Bloomberg NJIT STEM report. Tom, Lisa, John.
Bob Moon, thank you, sir. Thank you very much, as always. Let's get you some news, some headlines worldwide. We can do that with Michael Barr. Good morning, Michael.
Good morning, John, Lisa, Tom. President Donald Trump says we're not going to let the cure be worse than the problem, and indicated that they will make a decision on new recommendations after the initial 15-day period of self-isolation recommended by the White House has expired. The president says he will listen to his medical experts like Dr. Fauci.
He's very important to me, and I will be listening to him. I'll be listening to Deborah, who you just spoke to. I'll be listening to other experts. We have a lot of people that are very good at this, and ultimately it's a balancing act. But, you know, the expression, we can do two things at one time.
The president also noted he continues to work with Republicans and Democrats on Capitol Hill to resolve disagreements over the stalled economic stimulus package. Washington State's Governor Jay Inslee issued an order that requires residents to stay home for the next 2 weeks to prevent the spread of the coronavirus.
Stay home. Stay healthy. The less time you spend out in public, the more lives we can save. The more time we can buy to fight the waves of this virus coming down on us now and in the immediate future.
Inslee says distancing ourselves is the only weapon we have against the virus. Exceptions were made for jobs deemed critical and grocery shopping. Chinese authorities are lifting a 2-month lockdown of most of coronavirus-hit Hubei province as domestic cases of the virus continue to subside. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. Thank you very much indeed. Your news, your headlines with Michael Barr. Here's your price action. Equity futures in and around the upper limit through much of the last couple of hours on the S&P 500, up by 4.82%. In the bond market, here's your treasury market. Yields unchanged on 10s. We come in about a basis point to 0.8%. From New York City this morning, good morning. You are listening to Bloomberg Surveillance. We are live on Bloomberg Radio.
With a Bloomberg Business of Sports report, I'm Michael Barr. The Tokyo Olympics looks likely to be the first to be postponed since the modern games began in the 19th century, as national teams plan to pull out and Japan's leader acknowledged a delay may be unavoidable due to the coronavirus. Australia will not be sending a team to this summer's Olympic Games in Tokyo. Australian Olympic Committee CEO Matt Carroll said the Australian team will compete in 2021 if the games are rescheduled.
The athletes desperately want to go to the Games, desperately want to represent their country at the Olympics. But they also take on board their own personal health.
Canada also says it will not send athletes to the 2020 Tokyo Olympics unless the Games are postponed until the coronavirus is under control. And that is a Bloomberg Business of Sports report. I'm Michael Barr, brought to you by Marcus by Goldman Sachs. With a high-yield online savings account, you can money.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Witch Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom. Witch.co.uk. Our tests find you the best.
Mayday, Mayday, this is Red Dwarf. Our engines are dead and we're being sucked into a black hole. Can anyone hear me? Over? The only thing that's over is us, Crichton. We're finished.
Guys, relax. I've got Smart Breakdown with the AA. It sends them your vehicle's fault data, so they should know what's wrong before they even get here.
I don't believe it.
What, that they'll already know what's wrong?
No, that you're actually capable of something useful.
The future of breakdown today. The AA. Drive smart. See theaa.com for details.
Yo, look at this, look at this. What do you reckon? Should I swipe right? Yo, check this out, check this out, check this out. Yo, bro. Hey, look at this. Yo, look at this, look at this. Should I swipe right? Hey, look over here. Yo, bro, check this out, check this out. Should I swipe right? Check this out. Look, I'm vomiting rainbows.
Oi. Get your phone out my face. I'm trying to drive.
Sorry, mate. Your mate's more likely to crash with passengers in the car. So don't drive him to distraction. Let a mate concentrate.
Coming soon, Ricochet, the new action film written by, directed and starring Euro Millions winner Timothy Barker, with music by Timothy Barker.
Tonight's Euro Millions jackpot is a massive £15 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
Up 110 points. Dow futures up 881. NASDAQ futures up 321. The DAX in Germany is up 6.6%. 10-year Treasury down 3/30 seconds. Yield 0.79%. Yield on the 2-year 0.30%. NYMEX crude oil up 3% or 70 cents at $24.05 a barrel. And COMEX gold up 6.2% or $97.70 at $16.70.90 an ounce. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Very good. Karen, thank you so much. Thank you for those wonderful data checks. Bloomberg surveillance worldwide, coast to coast, and particularly from American Airlines Dallas-Fort Worth today. We say good morning to Texas. Robert Crandall with us now, who is identified with the airline business, starting with TWA years ago, and then his leadership at American Airlines, single-handedly inventing frequent flyer miles and the rest of it, and now a well-preserved 85th year, and he joins us this morning. Bob Crandall, we're so honored to have you with us. You have seen the ups and downs of airline bankruptcy and bailout. Does the aviation industry need another bailout or nationalization this morning?
Well, I do think it needs help, Tom. I mean, keep in mind, we've only got one big intercity transportation system, and that's the airline business. The airline business and the associated travel businesses are, they account for millions of jobs. So we've got to keep the airline industry functional. And I do think at the moment that what we're going to have to do is make a public investment in the airline industry to sort of sustain it during a period of time when cash is just running out the door in a river. So I think the trade-off is this is probably a good public investment. It needs to be offset with some controls. I mean, we can't have the airline business taking public money and then turning around and using its free cash flow to buy back shares, which is what it's done over the last 6 years. And we need to be sure that if we're going to help the airline industry, that people don't get laid off, and that we're not outsourcing maintenance to other countries.
How do you envision what would be a new regulation? I mean, folks, this is ancient history now, but the gentleman from Cornell decided we should be regulated, and Bob Crandall fought it for years along with everybody else. And look what we wrought. I mean, the quality air service today, I'll be blunt, folks, I fly international carriers as often as I can. Bob Crandall, what does the new regulation look like?
No, well, you keep in mind, Tom, I was the guy that said we should not deregulate. I always thought we should have some version of regulation. I think we should now. I mean, look, we invested in the airline industry after 9/11. We're going to invest in the airline industry now. I don't think we ought to regulate it the way we used to. But I do think that if the public's going to make an investment in the airline industry, that it is entitled to know that the airline industry isn't going to turn around and lay off a lot of people while it's taking money from the public. The airline industry isn't going to turn around and abandon cities that don't meet the profit metric. It isn't going to turn around and take its own free cash flow and buy back shares.
Yeah.
So there are some. Don't use the word regulation. Let's use the word constraint. There are going to be some constraints on a business that needs to be regarded, in my view, as something of a public utility.
And actually, that's certain. Some of those provisions are being included currently in a House bill being circulated to prevent share buybacks and certain executive compensation when it comes to the airline industry. But Robert, I'd love to get your sense. Who's to blame for the 96% of free cash flow that went to buying back shares of the airlines over the past 10 years?
Well, who's to blame for it? Obviously, the folks that are running the airlines are the folks that decided to do that. And the boards of directors as well as the executives are actually running the business. And that's just a foolish thing to do in an industry like the airline industry. You always know there's a black swan waiting around the corner. And back in the day when airlines weren't as consolidated as they are today and therefore were not as profitable, one of the rules of the road is you never bought back stock. You didn't pay dividends. You didn't buy back stock because you needed a well of cash to go to when something bad happens to you. Something bad always happens to the airline industry.
Bob, forgive me for playing devil's advocate, but
sure.
Why should we give money to an industry that's very, very difficult to be in? You know, as a former CEO, to run an airline is incredibly complex, really quite difficult. Why does the government want any part of that whatsoever?
No, it doesn't want any part of it. I don't want the government to take over the airline business. Good Lord. But I do think that the government, in the interest of employment and the interest of the economy, look, the travel business, including the airline industry, accounts for millions and millions of jobs. I mean, all over this country. It's probably the world's largest employer in terms of, and so every country, including the United States, needs a vibrant, healthy travel and tourism industry, and it needs to keep the airlines going. Now, apparently, France is talking about nationalizing Air France. I don't think we want to nationalize our airlines. I do think we need to make available long-term, very low-interest loans, and while those loans are outstanding, we need to impose some constraints on the business.
Bloomberg 1130 New York, good morning. Let me ask this pregnant question here. Bob, why are airports so lousy? What do we need to do to speed up the rebirth and rekindling of our airports?
We need to invest more money in them, Tom. But look, our airports, there's been a continuing battle for years and years and years and years that the airports as a group would like to impose higher travel charges on the public. So how do you finance airports? Today in this country, we don't finance them publicly using taxes. We finance them by transaction charges on individual passengers. The airports would like to raise those charges. The airlines, recognizing that as prices go up, the desirability of travel goes down, have resisted that effort, but we have lousy airports because we don't invest enough money in them.
Bob Crandall, it's been great. Thank you so much. Greatly appreciate it. Mr. Crandall of American Airlines. John, that's great. John, I think about the fees at Heathrow when I go in and out of Heathrow when Francine has a Gulfstream. And I mean, I don't know if that's where America's going, because those fees at Heathrow are sky high, aren't they?
Well, the reason I asked this question, Tom, about why would the government want any part of this is because we're not talking about interest-free loans for a lot of these industries. We're talking about taking equity stakes in some of these companies. So I agree, you can make the economic justification for offering help to some of these industries, but you have to think about how you're going to structure that help. And the talk of the last couple of weeks has been about equity stakes, not just interest-free loans.
Yeah. Let's do a data check here, John. I mean, I'm looking at a market. We'll limit up, and I guess that means the VIX comes in a solid 6 points, 50. I can't believe that number, 55.54, and that's a better VIX.
Should anyone be surprised with the swings we've got? The VIX has a 55 handle.
And we feel better.
Unbelievable. I guess it's all relative at the moment for everyone listening, tuning in. It's fantastic to have you with us on this Tuesday morning. Good morning to you all. You are listening to Bloomberg Surveillance with futures nicely positive. We are
every sound. Every voice, every note. Expect perfection with Lynn Products. 5 decades of innovation deliver that distinct Lynn sound, bringing you closer to your music and films. From turntables, loudspeakers, and streaming devices, you can guarantee Lynn to provide room-filling, amplifying, jaw-dropping sound that all becomes clear when you hear it. Beautiful listening experiences, hand-built by Lynn. Visit lynnproducts.co.uk to book your experience at one of our retailers. Or join us in Harrods in the 5th floor technology department.
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
Coronavirus is affecting us all. During this difficult time, we're helping critical workers to make essential journeys by public transport. So, from Monday the 23rd of March, TfL will be operating a gradually reduced service on our network. Some stations will be closed so that we can keep key stations open. Night Tube and Night Overground services have already stopped running, but our extensive night bus service will continue. The Waterloo and City line is now closed. We will keep you updated as our services change. Search TfL.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Witch Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom. Witch.co.uk. Our tests find you the best.
From cafes by the sea to restaurants in the city, at Starling Bank, we'll help you keep your business flying high. With flexible overdrafts of up to £150,000, we'll get your cash flow running smoothly. Your business is ready for takeoff. Starling Bank. Helping business fly.
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home.
This week on the New Yorker Radio Hour, we're taking a deep look at the way the coronavirus pandemic has rippled through every aspect of our lives, seemingly in a matter of days and weeks. Whether you're working from home, not working, or have to go to work, COVID-19 has changed everything. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. I mean, let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. Good morning from New York. It is a changed New York in lockdown, and now London in lockdown as well. And, of course, all the good viral analysis we're seeing. We're really getting together a month's worth of data on this disaster worldwide. It's extraordinary how difficult some of these stories are. Wrapped around it is the difficulties of the markets, the economics, the finance, the investment of the moment, obviously the politics in Washington this morning. But what Lisa Abramowitz, John Farrow, and I can tell you this morning is the markets, at least for one lovely Tuesday, are better. John, I want to just encapsulate this as SPX limit up, SPY, the ETF up 5%. But to me, John, the major story is finally weaker dollar among major currencies, weaker dollar among emerging market currencies.
I agree with you, but it's a moment in time, and at the moment, over the last couple of weeks, there is a big story taking place in credit, and the demand to draw down credit lines. GM intending to draw down about $16 billion from revolving credit lines. A little bit earlier this morning, we heard from Vale, the iron ore maker. Vale tapping a $5 billion in credit lines to boost cash amid the pandemic. And Lisa, this is the ongoing story, the dash to cash, the demand for dollars.
Yeah, and John, Brad Rogoff over at Barclays expects this to actually be a bigger wave of drawing down credit lines than even during the 2008-2009 period. And there's a big question about who's providing that liquidity. The Federal Reserve yesterday backstopping the investment-grade bond market, not backstopping the high-yield bond market. And you're continuing to see weakness there. And I think that that's going to be an ongoing theme, that basically is the Fed backstopping one part of the market and allowing the weaker companies to fail.
Let me go philosophical in the two of you, because Julian Emmanuel will join us, and he doesn't want to go philosophical. He wants to talk derivatives. Are we trying to do this without bankruptcy? I mean, I get it. There's huge hardship. And, John, you capture this in your interview with Senator Warren yesterday. But are we trying to do this pain-free, John?
No, we accept there's going to be bankruptcy. We accept there will be layoffs. We're seeing them. The claims number this week is going to be absolutely dreadful. There's two things that the Fed is trying to do. One is market functioning. Huge effort, laser focus there. I hope it has some success. The other is to support financial conditions with a focus on investment-grade companies. And a big reason for that, IG, the big multinationals, are the big employers in investment grade. And I think they're going to concede there will be some pain in high yield from some of the smaller companies that just aren't going to get through this and will need help from the fiscal side of things and elsewhere. One thing the Fed can do is really support investment grade in a major way, considering they're not talking about buying corporate debt.
Lisa, you've been way out in front of this, and particularly on distressed hydrocarbons. That was before the Saudi-Russian oil war. Do they have any chance of survival given $23 West Texas Intermediate?
A lot of them don't. A lot of them are going to go bankrupt. And this is sort of something that's being accepted and priced into the market. The question is, this is a dual shock. It's not just the oil prices. It's also what's happening in the leisure and the travel industry. And, I think that it goes back to fiscal stimulus. What support will they be there? The Fed's not going to do it for them.
Well, I want to paint the picture for our viewers. We welcome all of you in Washington and Boston, nationwide, Sirius XM channel 119, all the different digital products as you listen to us, Bloomberg Radio from your home. A lot of people on Global Wall Street working from their home. I need to paint the picture. John Farrow looking out well over across Long Island and all seeing each plane land at JFK. Lisa Abramowitz in 6,000 square feet over on the Upper West West Side, and I'm in my studio. I'm in my studio here in New York. I can notice that the air seems to be cleaner in New Jersey.
I've been to your apartment. I know exactly what it looks like. Don't start it.
Yeah,
it is
6,000 square foot, right.
It never has looked like this. John, I can literally feel like I see to Pennsylvania. Julian Emanuel with us right now with BTIG, of course, expert in equities and derivatives. Julian, what does the derivative market say to you right now? What are the indicators in derivatives that gives you direction in regular common stock?
Sure. So yesterday was critical in our view because as you made a lower low in the S&P 500 and all the major indexes, you didn't make a higher high in the VIX. And when you put that in the context of the fact that between limit down Sunday night, then massive rally on the back of the Fed, and then a collapse, a total movement of almost 24% of the value of the S&P 500 from low to high to low, it basically tells you that for the most part, sellers are exhausted. They may not be finished, but they are exhausted at the moment. And so that's the start of a bottoming process in our view.
Julian, really hard to make the argument that things are bottoming in equity when we haven't seen that happen in credit yet. High yield spreads out to about 1,100 basis points. The non-energy component getting out to near 1,000 now. And the direction of travel is still concerning. Can you construct an argument that equities are bottoming, absent of a bottoming out in credit?
Well, I think basically, you spoke about it a little while ago in that, the government is now in the business of picking winners and losers more than perhaps in 2008. I would argue well more than 2008. And clearly the priority is on the employers, the larger companies. This will be a process that'll get managed. Ultimately, the Fed will oversee the high-yield market. And as you said, there will be bankruptcies. But the fact is that, for the most part, you tend to look through these types of things. And I would suggest that when you look at the first quarter of 2016, and obviously the bankruptcies in high yield will be, far in excess of that down 32% could be the beginning of discounting in the equity market.
So, Julian, there is a question about the fiscal response. You were talking about the government and support for some of these companies. But I want to go back to the Fed and trying to support market functioning. And I'm trying to parse through market functioning versus credit risk. And I'm looking, for example, at some mortgage funds that are unable to meet margin calls. Invesco Mortgage Capital, the latest one, crossing the Bloomberg earlier today. You're seeing a lot of distress, fire sales over the weekend, trying to get rid of some of the assets to meet redemptions and margin calls. At what point is this going to be an ongoing problem for the system versus just idiosyncratic potholes that are blowing up amid the volatility?
Well, I think it actually has been a systemic problem, which is why you've seen the Fed do what it's doing. From our point of view, you really want to look at commercial paper, and you want to look at, frankly, trading and clearing volume in all of the fixed income markets, because to us, one of the interesting things about this environment is that if you look at it, the equity markets have functioned much, far superior in terms of liquidity than the fixed income markets. We will be watching commercial paper very, very carefully.
Julian, what have you, this may be an unfair question, but I'm going to go that it's Unfair Tuesday. What have you learned about active versus passive in this crater? I mean, active's been waiting for a crater for years to say active's better than passive. You got any wisdom on that?
Well, what we're learning is the combination of the government intervening is causing active versus passive to look a little different than perhaps we might have expected. Typically you might see some more of the value type areas start to emerge and stabilize first. But again, when you look at it and you think about the weighting in the index, you really, you look at the value of technology, financials, healthcare, and communication services, and they dominate the index as a whole. Yeah. And those happen to be the areas that the government is likely to pick, winners over losers.
John Farrow, is Apple looking for a bailout?
I don't think Apple's looking for a bailout. I think that's a silver lining on a morning like this morning.
I'm sitting on a couch. You know, John, underneath my couch is probably 3 pair of AirPods that have been lost.
Yeah. You're supporting the company still. I'm pleased to hear.
Let me look down there. Keep on.
You do that. You do that. Julian, I want to transition to a really complex question right now that has got a whole lot more fuel in the last 24 hours, and it's something investors increasingly might have to think about. I don't want you to speak directly to the health issue, and I know that's difficult at a moment like this, but just explore the following with me. The president is making it pretty clear that he's thinking about the cost-benefit analysis, and it's a tragic story and it's an ugly process of remaining shut down, and whether the cure is worse than the illness. And the reason I think investors need to start thinking about this is if they pull back on the mitigation efforts too early, and then we have to think about bringing them back in the summer and bringing them back in the fall. I just wonder how choppy and how messy this could get if we don't shut it down all at once. For markets, that is. From a market's perspective, from what you hear from the president at the moment, Julian, how complex is this issue?
So if you look at the evolution of the last 16 hours or so, it's very clear that part of the reason that the market started rallying overnight is because there was an expectation that the president intends to bring the economy back sooner than expected. You can opine on what the health implications of that are, but there's no question about that from the market's point of view that is how we reacted. Look, it's an incredibly difficult trade-off, and what we're thinking is that the actions that the Fed took yesterday, in concert with what we certainly hope, and honestly, if we don't get a bill today or tomorrow, the level of irresponsibility in Washington will just be, off the charts. That the combination of those things can get us, to manage the economic trough into the summer. But the real question is, in mitigation, do people want to get on airplanes and eat out come the fall? We need to get to that point.
Julian Emanuel, great to catch up with you. Joining us from BTIG on the market. A headline crossing a Bloomberg: Intel suspending stock buyback. Surprise, surprise, another one. The dividend payment will not be affected, but Intel suspending the stock buyback program at that particular company. Not the only one, and we expect many more still to come. Let's get you some news, some headlines worldwide. We can do that from New York. We can say good morning to Michael Barr. Good morning, Michael.
Good morning, John, Lisa, Tom. President Trump says the White House will reevaluate their social distancing guidelines after 15 days, saying he does not want the cure to be worse than the problem. At a White House briefing, the president said keeping the country shut down could be detrimental to the American people.
I'm talking about where people suffer massive depression, where people commit suicide, where tremendous death happens. Now, in addition to that, we're talking about economic, where you really hurt a country. It could take years and years to recover. And the longer you stay out, the harder it is to recover.
Washington has made an unprecedented threat to cut $1 billion in Afghanistan funding after rivals in Kabul refuse to work together to advance peace. The threat comes at a time when the impoverished nation risks being overwhelmed by the coronavirus pandemic. The Afghan president and his bitter rival made no comment today, a day after U.S. Secretary of State Mike Pompeo called them out in a harsh statement. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. Thank you very much. That's the news, the headlines with Michael Barr. Your equity market's shaping up as follows. On the S&P 500, still positive. It was limit up moments ago. It's now positive 4.3%. From New York this morning, good morning to you all. Alongside Lisa Abramowitz and Tom Keene, I'm
here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Influential conversations from Bloomberg Television. Here's Yvonne Mann.
Let's bring in prominent Hong Kong businessman Alan Zeman, chairman of the Lan Kwai Fong Group. There's an interpretation out there that by allowing restaurants to still operate and stay open, but just restricting alcohol sales, that the government perhaps can avoid giving out compensations to bars and restaurants. Is that how you see it?
No, because, people who are in the business know that in restaurant business, without alcohol, you basically just break even on your food or even lose money on the food. The money comes from the alcohol. The profit comes from the selling alcohol, selling wine or beer or whatever it is. And that's the biggest problem that that the restaurants will have in general. Majority of the restaurants, there's 250,000 people that are employed in the industry, so it's not a small number. And as I say, they all work hand to mouth. You don't have a lot of chains, so they need to be looked after. It's really something, and I think I've talked to Carrie Lam, and hopefully something will be worked out. She understands the problems. Hopefully she will start to come around.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. GM planning to draw down about $16 billion from revolving credit lines. It's also suspending 2020 guidance due to uncertainty around the business impact of the COVID-19 pandemic. Intel has suspended its stock buyback. Its dividend payment was not affected. And the IATA saying that airlines could lose $252 billion in 2020 sales due to the virus. Futures are higher, with S&P futures up 91 points. They're off their session highs, up 4.1%. Dow futures up 754, NASDAQ futures up 273. The DAX in Germany is up 5.8%. 10-year Treasury down 9/32, the yield 0.81%, yield on the 2-year 0.31%. NYMEX crude oil is up 2.7%, up 62 cents at $23.98 a barrel. And COMEX gold is up 6%, up $94.90 at $16.68 an ounce. The euro 1.0825 against the dollar, British pound 1.1697, and the yen 110.99. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you so much. An extraordinary day, again, as you hear from Karen Moscow, an up field of the market. But with that is serious discussion about the virus. We've got an important interview late in the 9 o'clock hour Wall Street time with a virologist. Right now on China, without question, the interview of the day, and not with someone with medicine, but someone with a deep knowledge of how China reports data. Leland Miller is with China Beige Book, and we're thrilled that he could join us right now. Just immensely qualified on the veracity of their data. Leland Miller, or Daniel Moss has written, maybe not. And I've seen a lot of other pros like Carl Weinberg say, maybe not. Do you believe the statistics out of China right now on their better news on virus?
You know, I believe the virus news is getting better. There's definitely a slowdown in the rate of infections. The problem is you can't believe the actual numbers, because right now there's a political narrative that the party has swooped in, saved everybody, and is responsible for this wonderful virus cleanup. And so as long as there is a big political push to make this an issue of politics and not strictly the medical area, then you never know what numbers to believe. I think things are getting better, but the exact numbers, I think it'd be very dangerous to take them seriously.
And Leland, the one reason why it's always great to get you on is because you look at non-official data to gauge the actual economic activity in the entire region. And I'd love to get your sense of what you've observed as far as how quickly they've brought business back online. We have heard from the party that things are going very quickly and very well, and they're expecting a full recovery very quickly. Are you seeing that borne out in sort of the anecdotal evidence that you look at?
Yeah, the idea of a full recovery is nonsense anytime soon. Firms are going back to work. Now, we are seeing workforces back, and people are outside, and factories are starting to run again, and lights are on, but you're not seeing a resumption in any of the growth metrics. So one of the more disappointing things we saw is that even in the first half of March, when we were getting our data in, firms were going back to work. I mean, the share of closures, the firms reporting closures was way down as we extended into March, but the data were not getting better. And the problem with this is that China is very anxious to have a recovery narrative. They announced their bad data for January and February, and now they want to get on with the recovery. But the recovery is not so fast. You're actually seeing the worst data we've ever seen without question right now.
Right.
And Q1 is likely, around a negative 10, negative 11 contraction.
Give us a Leland Miller example of wacko data that matters. Like, is it the number of, crew members on iron ore ships, or is it, counting containers as simple out of Shanghai as you can? I mean, what's a data point that matters to you to gauge that?
Well, it's very different this quarter than any other quarter we've ever tracked, because typically what we do is we go through the weeds and we try to find the areas of strength, but also the real areas of weakness that others haven't identified. And when we looked across the spectrum this quarter, everything was weaker. Every sector was weaker. Every region was weaker. Every headline metric was weaker. And not just weaker, but the weakest numbers we've ever seen, all of them in severe contraction.
Leland,
so different ball game this quarter.
Leland, I want to go back to what you said, the 10 to 11% contraction in the first quarter. Can you extrapolate that out based on what you're seeing in terms of a pickup or not in recovery in the second quarter and beyond? What are you looking at for the full annualized GDP for 2020 in China right now?
Right. Well, the outlook's getting a bit gloomier for China, even though their economy is getting better. And what I mean by that is this is no longer just a domestic China story. Even if there is an enormous level of domestic resilience and the party pushes everyone back to work, and output and consumption and demand are all back faster than anyone could possibly assume would be the case, you have a problem with the rest of the globe shutting down. So Q2 was supposed to be the time in which Chinese factories were back up and running, and then you would have global demand take over. Now U.S. factories are down, Europe's down, demand is cratering worldwide. So the idea that Chinese will have a recovery in Q2,
right,
sure, from a contraction, it's not going to be back to normal levels of growth.
What would happen to China if the president came out and lifted the various trade initiatives he's put in place? I mean, is that beneficial to China, or is that a U.S. story?
Well, look, if you had an end to the supply shock and the demand shock, and you pulled back all these trade initiatives, I think you'd see quite a juice to growth. The problem is right now there's no demand. There's no global demand. So you're having a resumption of business as usual in China over the next couple of months, but there's no demand. No demand. from the major trading partners.
Yeah.
So right now you have no effect or very little effect, if any.
Okay, Leland Miller, this has been wonderful. Thank you so much with China Beige Book. Just very, very informative this morning. Lisa Bramwitz and Tom Keene, we're working from our homes today, which is, for both of us, a really lovely experience. There's all sorts of differences here from being in the studio with John Farrell. One of them, Lisa, is trying to do the lost iPod inventory under the living room couch. And I'm pleased to tell you that I could find no iPods under the living room couch, which means they were probably kept in Starbucks.
You mean AirPods, right?
AirPods,
you have
yeah,
an
whatever they're
entire
called.
Apple store under your couch, evidently.
What I did find under the couch, and vet bill's on my lap right now, is
I can hear him.
Can you hear this ball?
Oh my God, Tom!
I found the ball.
Oh
Okay.
no! What are you doing? Are you making breakfast as well?
No, this is a famous veterinary ball. This I got from the vet, Horseman Vet, and it's from Al from New Jersey. It's an Al from New Jersey vet ball.
Oh my God!
Right there.
Tom, that's right.
I don't think I'm going to give it to the dog this morning.
Yeah, you're just going to play with it yourself, just to keep yourself occupied with your bow tie and beard and your coronavirus beard. I love it.
Let's do a data check as we do it. Let's do it broad and not too detailed. Karen Moscow's killing us with a detailed data check. So what you need to know, folks, right now is we have much better markets on Tuesday. I said on my TV script this morning, there is optimism in the tape, and you see it in the equity markets with the limit uplift up 4% right now. And particularly you see it with finally a little bit of dollar relief, a weaker dollar across most major and EM currencies as well. Worldwide, from New York, Lisa Bramowitz and Tom Keene, this is Bloomberg.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg Money Minute. Futures point to gains at the open on Wall Street after stocks kicked off the week on a down note as investors continue to await an economic rescue package from Washington amid the coronavirus pandemic. Ford is teaming up with two other manufacturers to build more ventilators and masks for healthcare workers and first responders. The automaker will work with 3M on a new mask design, and Habits United Auto Workers assemble more than 100,000 plastic face shields a week. Ford said it will also help General Electric boost output of ventilators desperately needed by hospitals. President Trump has signed an executive order aimed at preventing hoarding and price increases amid runs on products such as protective masks and hand sanitizer. Attorney General William Barr said the government won't go after a family with the big supply of toilet paper, but if you have a warehouse of surgical masks, he said, you'll hear a knock on the door. The Department of Health and Human Services will decide which products people are prohibited from hoarding and selling for above market value. Gina Cervetti, Bloomberg Radio.
What if you could keep the top economic experts in a conference room next to your office without having to feed them?
Do we need better optics? Do we need some substance? Do CEOs care about ESG?
We have seen quite a lot of stimulus pumped into the system already.
It's the biggest warning yet about the financial risks of climate change.
Now there are more ways to hear us. Bloomberg Radio, the Bloomberg Business, Radio.com and iHeartRadio apps, and at BloombergRadio.com. Bloomberg, the world is listening. They don't just talk to the most important people.
Is it as ominous this time around?
They talk with the most interesting people.
Are they taking this seriously?
Bloomberg Markets, weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we are live on Bloomberg Radio, 60 minutes away from the opening bell in New York City, with equity futures nicely positive. Off-session highs, but still up a little more than 4%. As Thomas said all morning, the tape is just a little bit better, a whole lot better compared to some of the swings we've seen to the downside. In the bond market, yields are higher by 4 or 5 basis points, 2s out to 30s. A little bit of a steeper curve here, 30-year yields up to 1.4%. Your 10-year yield in America, 0.83%. And in foreign exchange, Tom, a story that you've been focusing on, I know, laser focused on the US dollar. In today's session, the dollar weaker against pretty much everything in G10.
In G10 as well, G50 as well, G180, a number of the nations at the IMF and that emerging markets finally get some relief. We'll see how that unfolds through the morning. And again, folks, I really want to emphasize, maybe we're downplaying it a little bit, but Washington is a huge story today, looking for that fiscal response. What we've been trying to do is go to experts in the field, whether it's Peter Steyer, we talked to at Mount Sinai, Brooklyn yesterday, Robert Crandall joining us, the Emeritus Chairman of American Airlines earlier. Now Randall Krosner, the former governor of the Federal Reserve System. Randy Krosner joins from the Booth School, Chicago. Professor Krosner, wonderful to have you with us. I want to go to the mathiness. There is a point in physics where you forget about the fanciness of the equation and you just look at the magnitude, or what's called the amplitude. Do we have any understanding of the amplitudes of this shock, the size of the shock we're confronting?
We really haven't seen something like this before, because this is both a natural disaster and one that, in order to respond to the natural disaster, we're taking policy actions that are significantly slowing the economy. And I don't think we've ever seen that specific combination before.
We have not seen it before, but we have to sort our way through it. Do the formulas and the theories work here, or is it just to throw a lot of money at the wall?
No. I think there's still, we don't have, we don't know for sure, but I think we still have guidance from other examples of the past, whether it's from the pandemic in the early part of the 20th century or other challenges that have occurred. I think it's really clear that the lessons from the financial crisis in 2008, 2009 are that a fundamental is that you need to keep the financial system operating, and I think that's what the Fed is trying to do. Obviously, the shock is coming from something very different than the mortgage market, but I think the lessons have been learned there, and they've stood up a lot of the programs that we did back when I was there a decade ago, and they're doing new things, which I think is great.
Professor Krosner, I want to talk a little bit about those new things that you talk about. Do they have anything left based on your experience in the crisis era at the Federal Reserve and based on what we're seeing right now?
Well, they've done a lot, and a lot of this is still being implemented. We'll see the exact magnitude, and you see they're able to revise some of these. They were originally buying $500 billion worth of treasuries, $100 billion worth of mortgage-backed securities, and now that'll be unlimited. And so they may, and they are starting to enter other markets, and they can increase their firepower in purchasing assets in those other markets. They are introducing or talked about introducing a Main Street lending program. I think that could be helpful for small and medium-sized businesses and for consumers. So I think they've done a lot. I think there's still more ammunition left, both in terms of the magnitude of programs they've already announced, as well as some specific programs like a Main Street lending program.
Professor, we've talked a lot about what they've done, and they've done a lot. Let's talk about what they've achieved. What have they achieved in the last couple of weeks with this whole range of tools that they've basically deployed to really get at the functioning of the market and the financial conditions as well?
So I think the markets are still functioning, not perfectly, but much better than if the Fed had and other central banks hadn't undertaken the actions that they had. But when the shock comes from something like a virus, the Fed can do what's necessary, but it's not sufficient. And I think the reason that we haven't seen the markets stopping the tumult in the markets is because it's now with the health authorities and fiscal authorities, and there have been mixed messages. Some countries doing more, some countries doing less. It's obviously the debates in Congress over what kind of package, whether the package will be passed and when. That's creating a lot of uncertainty and tumult.
A lot of division in Washington, D.C., so let's talk about how the effort in Washington could complement what we've seen on the monetary policy side. What do you need to see, literally yesterday, as soon as possible, from Washington on the political side of things?
I think getting an agreement, that in and of itself will be very valuable to the market to see that, yes, they can get something together and they can act against this pandemic. Then, in particular, I think it would be really valuable to make sure that it's very well focused on what are the issues. So first, making sure that there's sufficient funding for healthcare and giving incentives for healthcare workers in retirement to come back in. That's, I think, something very important. Second, making sure that vulnerable people continue to be able to get income, and in particular, that their incentive is not to go into work, but to stay home during this period, but still be able to receive income. You can do that through sending checks to people. You can do that through various support to small and medium-sized business to get them to continue to pay the wages of people who would be staying at home. Those are some of the first things that I would focus on.
Professor Krosner, last week and even the week before, we were really talking about a financial crisis in addition to the economic crisis unfolding. Has the Fed effectively stopped that? Have we avoided a financial crisis at this point, or is it too early to say?
Well, given my experiences back in 2008, 2009, I never say never about anything. But I think that the Fed actions have been crucial in avoiding a financial crisis so far. And I think if the fiscal and health authorities act in expeditiously and effectively, then I think we'll have been able to get through that. But it really will depend on the size of the economic shock, and that's now the court of the fiscal and monetary, fiscal and health authorities.
And now, as we do for surveillance, it's Math Tuesday with Randall Krosner of Chicago. Randy, Paul Wilmot, the giant of Imperial College, and a guy named Taleb gave a rave review years ago to Kent Osmond's masterpiece, Iceberg Risk, which was basically a complete refutation of the central limit theorem. Are we doing that again? Are we so fancy in our Krosner-like math certitude that once again we've learned that the once-in-a-lifetime event comes along every 12 years?
Well, I think if you we've talked about this before, I think on your program, that I get worried when other people aren't worried. So I focus a lot on doing scenario planning, doing stress tests, and risk analysis for things where you're just not sure. You don't have the data for it. It hasn't happened, but let's see what if. Can you withstand something like that? And so these are the things that you have to think about. Can you perfectly plan for them? Of course not. Can you have better readiness for them? Yes. And I think in some sense, we learned a number of lessons from 2008, 2009, and it helped to allow the Fed to respond much more rapidly because they didn't have to create programs like the commercial paper facility and the money market facility and so many of the others whole cloth like we did, they could stand them up quickly, and that gives them an opportunity to ramp them up, move them to scale, and do some new things.
To borrow a phrase from Nicholas Taleb, and that would be just simply skin in the game. I guess we've all got skin in the game now with this horrific crisis. I don't mean to make a joke about it, folks, but Randy, the recovery rate, the glide path to recovery, we forget out of the Depression, it took a war and stimulus of a war to get equities to lift back to where they were in 1929 after 1937. How do you envision a recovery here to Dow 29,000?
So I think that ultimately will be related to the underlying economics, and can we make sure as best as possible to try to make this a V-shaped recovery rather than a U-shape or an L-shape sort of thing. That is out of the hands of the Fed. The Fed had a very important role in making sure we had a recovery in over the last decade. Here, they can make sure we could avoid a financial crisis, but the recovery pieces will have to come on the health side and on the fiscal side. If we can get agreements, if we can get some movement forward, I think we can get there and hopefully make it much more rapid than in the Great Depression.
Professor Krauser, thank you so much. Greatly appreciate it.
Thanks,
John,
Randy.
was that too much math?
No,
John,
I think it was just enough. Just enough.
Just enough.
That's enough for this Tuesday.
Yeah, I think this Tuesday math is done. Absolutely done.
I thought that was okay.
The kids want some time off school. Come on. Give them a break.
Oh,
get some news.
I am so getting it at home.
They've
had so much time
worldwide
off from school.
From New York City. Here is Michael Barr. Good morning to you, Michael.
Good morning, John. Good morning, Lisa. Good morning, Tom. Japanese Prime Minister Shinzo Abe and the International Olympic Committee have agreed to delay the Tokyo Games by 1 year because of coronavirus. Abe made the proposal in a telephone call with International Olympic Committee President Thomas Bach. Top congressional and White House officials negotiating the nearly $2 trillion coronavirus rescue package say they expect to reach a deal today. Treasury Secretary Steve Mnuchin and Senate Democratic leader Chuck Schumer say they spoke by phone with President Donald Trump as they met late into last night at the Capitol. Uber is asking Congress to expand unemployment benefits in its emergency aid legislation to cover rideshare drivers and delivery drivers who are working to be treated as independent contractors not normally eligible for such workplace protections. Bloomberg's Martin DeCaro reports.
Ride-hailing drivers have seen their incomes evaporate because of the coronavirus pandemic. So Uber's CEO wrote President Trump and congressional leaders asking for protections and benefits for independent workers. Benefits Uber does not provide itself. Harry Campbell is the editor of the Rideshare Guy blog. He surveyed hundreds of drivers about their dilemma.
81% of drivers said they'd seen a decrease in demand, and earnings are down across the board. And I think that it's only getting worse as more cities and states close down bars and restaurants.
Uber and Lyft say they'll compensate drivers who've been diagnosed with COVID-19 or have been placed in quarantine, but Campbell says there's been little help for the millions of others trying to stay on the road. In Washington, Martin DeCaro, Bloomberg Radio.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael Barr, thank you, sir. Thank you very much. Here's your price action. Equity futures off session high, still positive by around about 4% on the S&P 500. Looking for a bounce off the December 2016 low that we closed out in yesterday's session. You may well get that bounce at the open. Then a little bit later, 15 minutes into the session, Tom, we'll get a read on the data in America, a big focus on US PMIs.
Yeah, the big focus on U.S. PMIs. And, John, what's so important here is, again, I've got to go to Washington. John, could you imagine the disappointment if they don't get it done today?
Huge. I hope that we can make some progress because there's a lot of pain already. Looking ahead, some initial jobless claims this week that is going to look really, really quite ugly. And behind every ugly data point is a tragic story for a lot of people really struggling in this economy right now.
Well, and we should mention, John, also the first responders to all this in the hospitals overlooking this New York City.
Our thoughts with them all from New York City. Fantastic to be with you here on Bloomberg Radio. This is Bloomberg Surveillance, and we're live on Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Some big house flippers are standing down. Zillow says it has stopped purchasing homes. It calls the move an effort to preserve capital and protect employees. Rivals Opendoor and Redfin have already done something similar. They had been practicing a high-tech version of flipping known as iBuying. Redfin CEO Glenn Kelman says the problem is that in this market, no one can correctly say what a fair price is for a property. One real estate tech strategist says the iBuyers are sitting on thousands of homes right now that will be a big drain on capital, and the timing could hurt as well. The coronavirus is hitting just as we move into the height of the spring selling season. Zillow says it is still marketing its existing inventory online. It halted open houses earlier this month, but for the brave, there still could be some good deals, and mortgage rates are still sitting close to record lows. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fair housing. That's HUD.gov/fair housing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Whatever job you're searching for, find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
Coronavirus is affecting us all. During this difficult time, we're helping critical workers to make essential journeys by public transport. So, from Monday the 23rd of March, TfL will be operating a gradually reduced service on our network. Some stations will be closed so that we can keep key stations open. Night tube and night overground services have already stopped running, but our extensive night bus service will continue. The Waterloo and City line is now closed. We will keep you updated as our services change. Search TfL.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures and European shares are rallying alongside Asian stocks as investors rediscover some appetite for risk after global equities hit their lowest level since 2016. The dollar is slumping following a 10-day winning streak, and treasuries are slipping. Contracts on the S&P 500, NASDAQ 100, and Dow Jones Industrial Average all jumped more than 5% to hit their upper trading curves before trimming some of their gains. We check the markets every 15 minutes throughout the trading day on Bloomberg. Right now, S&P futures are up 103 points, Dow futures up 878, and NASDAQ futures up 320. The DAX in Germany's up 6.4%. 10-year Treasury down 15/30 seconds, yield 0.83%. The yield on the 2-year 0.33%, and the 30-year yield is at 1.40%. NYMEX crude oil up 2.6%, up 61 cents at $23.97 a barrel. COMEX gold up 6.2%, or $97.70 at $16.70.40 an ounce. The euro 1.0828 against the dollar, British pound 1.1725, and the yen at 110.75. The VIX at 55.75. GM saying it plans to draw down about $16 billion from revolving credit lines. And watching Intel It is up 6% this morning. It has suspended its stock buyback. Its dividend payment, though, not affected. And that's a Bloomberg Business Flash. Tom and Lisa.
Thanks so much, Karen. Greatly appreciate that. With us now, Mark Chandler of Bannockburn, and really timely to have Mr. Chandler with us after his wonderful book on the political economy of all this a number of years ago. Mark, you talked about the social astronomy that we're in, the financial astronomy that we're in. Part of that is fear means stronger dollar. Can you call an end to the dollar rally simply based on a lessening of fear?
Well, I know we are getting a pullback here today, Tom, but I'm not sure that this is the big one. I think that, the Federal Reserve tried to use the swap lines to relieve what seems to be a shortage of dollars, and it has eased the swap market, but it hasn't really taken off much pressure off the spot market. The pullback today seems because of the Fed's open-ended QE. I think there's a real debate about the dollar. One camp says it's rallying because people want it. There's a hoarding going on, a safe haven. But I don't think that's really the most compelling story. I think that the market is really short. The Bank for International Settlement says there's something like $12 trillion being used to fund other purchases. And I think that these are the dollars that are being bought back. It's a short covering dollar rally, and I do think we're in the last stages of it.
That's really, really important. Explain that better. Go into that deeper. So what does somebody do? They do a transaction, and what do they do?
So consider like maybe the Japanese bank buys a U.S. CLO, these collateralized loan obligations. But instead of taking on, in effect, buying them with borrowing dollars, instead of buying them with yen, what they do is not take the exchange rate exposure. So what they will do is borrow dollars. And there's many ways they can borrow dollars. Commercial paper market, swap lines, and bank loans. But because the banks are reluctant to lend, U.S. banks really want their own liquidity now. The Japanese banks are finding it hard to buy back the dollars as they retire, that is, sell the CLO. And so the dollar is used as its funding currency, but not just in small things like, say, hedge funds buying gold, selling dollars to buy gold, or selling dollars to buy the Nikkei. We're talking about a huge $12 trillion, according to the Bank for International Settlement.
Well, Mark,
Lisa, this is a huge, I don't mean to interrupt, Lisa, but this is a huge, huge deal that Mr. Chandler just explained. Huge deal.
Yeah, I mean, that's that. I wanted to basically push that forward, right? I mean, if we have these profound $12 trillion imbalances in the economy, not to mention all of the foreign governments and corporations that borrowed in dollars, I'm trying to understand if there is anything you could do to kind of stave off the dollar shortage, or if we should just expect a strengthening of the greenback and just sort of until it sort of reaches a bit more of a breaking point that perhaps people are expecting, given the sigh of relief that we're kind of feeling today.
Yeah, Lisa, I think you're right. We haven't quite reached that pain threshold. I mean, think about dollar yen at 110, 111. I don't think the Japanese are complaining like they were a couple of weeks ago when we were threatening to go through 100. But I think that the dollar's strength is becoming a destabilizing element in and of itself. You think about some of those ranges we saw last week. I think there were some days that we saw bigger ranges than we do in months in sterling or in the Australian dollar. And so I think the Federal Reserve is trying to sort of reduce the possibilities, and that's why I think the swap lines. Now, I'm not convinced the swap lines will work. So you say, well, what else could the Fed do? What else could central banks do? And that brings me to a more historical perspective. Thinking about this as a big dollar rally. How did the past $2 big dollar rallies end? Intervention. The Plaza Agreement in 1985, coordinated intervention, and again in 2000 when people like me were thinking we were buying a Lucent stock or Netscape, the Europeans said we were picking on the euro. And the euro had been born at 119, fell to 82.5 cents, and in 2000, a coordinated intervention, and that ended the Clinton and the tech dollar rally.
Well, Mark, intervention, and this is something a number of other players have talked for as well. What would that look like? How would the U.S. intervene here and sort of weaken the dollar?
Well, I think the way they did in the past, they'd have first, I guess, there's an escalation ladder, and the first ladder is to warn the markets that while the G7 want the markets to determine exchange rates,
They don't want destabilizing volatility, and that's what we've had. And so the first step would be a warning. And the next step might be a G20 or a G7 emergency meeting. And then to get the true shock value out of it, it would have to happen probably in thin markets after the U.S. markets close, maybe before the Asian markets open, or maybe it's in the U.S. morning when they got the full liquidity of the U.S. and Europe there, and the central banks would sell dollars like they have in the past in a coordinated fashion, not just like what we've seen some central banks do, intervene unilaterally. Like it looks like the Swiss National Bank might have intervened on their own account last week for maybe $6 billion or so. And that would be the largest in a few years. But that doesn't seem to be as sticky, as effective as coordinated intervention.
Mark Chandler, thank you so much for being with us. Really interesting, Tom.
Yeah, really, really important there. That discussion, folks, not just of the simplicity of dollar liquidity, but the effect of the transactions abroad. And Lisa, this goes to the absolute heart of the American discussion, which is why should America bail out the fancy guys moving paper around in things like derivatives and true synthetic derivatives? I mean, it goes to the heart of the matter that, once again, the financial system's blown up. You see it with dollar strength. Why should the average guy out there bail out the fancy guys with their fancy paper?
And an ongoing question, certainly in Washington, D.C., attention underpinning some of the questions around where the money's going to go. At the same time, a broken financial system doesn't lead to necessarily a stable economy for the rest of the world. So there you go.
And in the last hour, talk about the Olympics in Tokyo as well. That's how serious this is. Sports really challenged. We've got much more coming up. More good conversation today with equities elevated. This is Bloomberg. Good morning.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
This is a Bloomberg Money Minute. Stock futures are higher as investors take on more risk after global equities hit their lowest level since 2016. Traders are still awaiting an economic rescue plan for workers and businesses that stalled in Congress again yesterday. An airline industry trade group says carriers could lose $252 billion in sales this year because of the pandemic. Meanwhile, Southwest Airlines is scrubbing 1,500 flights from its daily schedule, 500 more than planned just days ago, because it is only filling about 20% of the seats on its planes. Ford is teaming up with 3M and General Electric to build more masks and ventilators for healthcare workers and first responders. And Amazon is taking action against price gouging sellers, suspending thousands of merchant accounts and pulling over 500,000 offers for violating fair pricing policies. YouTube says it will reduce the quality of videos around the world starting today, an effort by the world's most popular video site to ease internet traffic. Gina Cervetti, Bloomberg Radio.
They don't just talk to the most important people.
Can you give us your broad sense of the main driver behind the latest weakness?
They talk with the most interesting people.
When you talk to your clients, are they taking this seriously?
Lisa Abramowitz.
What's going to be the main driver of growth?
Paul Sweeney.
What did you take away from those Amazon numbers last night?
Bloomberg Markets.
Is it as ominous this time around?
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Once we get through coronavirus, it's very supportive and very stimulative.
Central banks themselves got caught hostage by markets.
Finance.
OPEC Plus is at war with itself.
We know we can create America's energy independence again.
Investment.
The market's anticipating the rate getting very close to zero in fairly short order.
Volatility is back, so that's going to make for more cautious trading.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Bloomberg Surveillance, thank you for being with us. It's been an eventful number of weeks for the team, and of course this week all of us working pretty much in lockdown, some of us at 731 Lexington, but for the most part we greet you from our homes. I'm looking over Central Park, a perfect day in New York City, really pleasant weather. And Paul Sweeney, the air is so clear, I believe I can see the Sweeney farm just outside Princeton right now.
Absolutely, Tom. Beautiful day out here, and we actually have some green on the screen for once, Tom. Limit up here. I think the market's discounting. Hey, maybe our good friends down in Washington D.C. will actually get their act together and pass the first of what will be probably several stimulus bills.
One of the things here that's so distinguishing about Karen Moscow's data checks, folks, is not only is it green on the screen for equities, but it corroborates with the dollar. The dollar is weaker finally, not only against major currencies, but finally against some of those beleaguered emerging market currencies. So there's some nice correlations, and we've had some wonderful conversations, including Robert Crandall of American Airlines fame, and also Randall Krossner, the former governor of the Fed, joining us earlier. We'll continue with that good conversation. They are an important Washington conversation in moments. Right now, with the VIX in 6 points, it's a good time to catch up on all the stocks that Paul Sweeney bought at the bottom 2 days ago that I didn't buy. David Wilson, which stocks are up today?
There are a whole lot of them, Tom, no question, and none perhaps more prominent than Apple. The shares are up 4.5% in early trading. The iPhone maker is poised to move back above $1 trillion in market value. Now, Apple dropped below that threshold yesterday for the first time since October, and that left Microsoft as the only $1 trillion company. Microsoft, by the way, also higher by 4.5%. Advanced Micro Devices up 5.5%. The chip maker was added to a list of top picks at Wedbush. We're seeing similar gains for the likes of NVIDIA and Qualcomm and other chip makers. And then we turn to Boeing, up 16.5%. CEO Dave Calhoun told CNBC that the plane maker will find its way, quote, to the other side of its business and financial issues. Calhoun said the company has liquidity and is paying suppliers. That gain is certainly in line with what we're seeing with the airlines. Delta up almost 19%. The carrier said late yesterday that it's consolidating operations at some larger airports. And you look at Delta's peers, you see American up 17.5%. You see Southwest up about 13%. You see United higher by more than 20%. Even as the Wall Street Journal reported that U.S. airlines are drafting plans for a potential shutdown of virtually all passenger flights. And the gains extend to the cruise line owners. Carnival's up 15%. They're exploring a financial package, according to DebtWire. The report cited three people familiar with the matter and said J.P. Morgan is working on the deal. That report came out late yesterday. Today, the shares are taking off. So are its peers. You've got Royal Caribbean and Norwegian up about 19%. MGM Resorts up 14.5%. The casino is higher for fourth day, even though we reported that lenders are stuck with billions of dollars in debt on two of its properties. Now, MGM Resorts operates the Las Vegas casinos, MGM Grand and Mandalay Bay. You look at the biggest banks, you see gains of 6.5% across the board for Bank of America and Citigroup and J.P. Morgan Chase and Wells Fargo. And then you look at the energy stocks. Well, they're higher as crude rises for a second day in New York trading. You've got the U.S. Energy Secretary Dan Brouillette talking about a possible oil alliance with Saudi Arabia being under consideration to stabilize prices. Put that all together. ExxonMobil up 8%, Chevron up 7%, and we're seeing Occidental Petroleum up 7.5%. I got one more for you.
One more, please.
Invesco Mortgage Capital down 33%. Now, this is a real estate investment trust that invests in mortgage-backed securities. Invesco Mortgage saying it couldn't meet margin calls made yesterday and doesn't expect to meet any future calls. You know, it's just yesterday, Colony Capital CEO Tom Barrack was saying that the commercial mortgage market is on the brink of collapse. We've certainly seen that happen with the mortgage REITs lately. Invesco Mortgage as an example.
David Wilson, thank you so much. Paul Sweeney, I would note that Dow Futures up 930 points, SPX Futures up 107 points. That puts Dow Futures at 19,400. So just to frame David Wilson's joy, we're down only 10,000 points, Paul, from where we were 3 cups of coffee ago.
Exactly right, Tom. What a swift move. Now all eyes are on Washington, D.C. once again. We had the Fed yesterday, Tom, kind of throw in the kitchen sink, if you will, with their quantitative easing, and now all eyes are looking at Congress for a fiscal stimulus bill. Didn't get it yesterday. Today is the day. Hopefully, we'll see. Jack Fitzpatrick, Bloomberg government budget reporter, joins us. So, Jack, give us a sense. We know there's a Senate version out there. There's now Nancy Pelosi bill out of the House. Where are these two bills now, and how do you think it's going to play out today?
Well, the fact that they had two competing bills that emerged yesterday rather than actually striking a deal was disappointing to a lot of lawmakers. Mitch McConnell wanted something to actually pass the Senate yesterday, so this is kind of a delay. But as of late yesterday, Chuck Schumer left the Capitol saying he was hopeful that there would be a deal by this morning. Granted, we've heard, we're on the precipice of a deal since at least Saturday every day, and it just kind of keeps stretching on. But really, as far as the timing goes, the expectation is they're close. They could get essentially a handshake deal maybe today. It may take a little time after that to turn it into legislative language, get it through both chambers of the president's desk. But they're looking for an immediate deal, and really, I think Pelosi's counter offer was supposed to pull Republicans in Democrats' directions. It's not necessarily a list of wholehearted demands that sets them back to stage one in these negotiations. It was a sort of a one last tactic to pull the negotiations a little closer to Democratic priorities.
Yeah, Jack, I'm confused by all this. I mean, they couldn't get anything done yesterday. What's changed in 24 hours? I mean, if Team A was disagreeing with Team B yesterday, why are they agreeing today?
Well, they've gone through a weird process and probably not a very effective process for negotiating this. Pelosi left town for the recess. McConnell decided he wanted to do a deal between the Senate and the administration. Democrats in the Senate complained and said, no, you should be talking to Nancy Pelosi, though she wasn't in town.
So they went back and forth in the Senate. Eventually, on Saturday, Republicans said, we basically have something close enough to a deal, we'll turn it into a bill. Democrats said no. That led to a couple procedural votes that failed. That was really a waste of time. Then Pelosi came back and said, okay, here's my starting position. The more effective and fast route would have, from the start, getting McConnell, Pelosi, Schumer, McCarthy, and Stephen Mnuchin in a room and saying, what can you agree to? And it's kind of emerging that even if the substance is serious in these bills, the process they've gone through has really tripped them up.
So, Jack, I think most observers would say arguably the most important thing is to get cash in the hands of American consumers. What's the status in this bill as currently drafted?
There are a lot of proposals that will have to be narrowed down between Republicans and Democrats. Democrats' bill that just came out would give $1,500 a person. That includes people on unemployment, retired people, up to $7,500 for a family of five. The Republican proposal had been $1,200 or $2,400 for joint filers. There will be some kind of expansion of unemployment insurance. That's an area that Democrats pushed. The Republicans made some concessions on. The airline issue in the Democrats' bill, this is essentially money going through the airlines to employees. Whatever they paid in payroll, they could get in grants now to try to keep people employed and getting money.
But this is critical, Jack. That's just, Jack, for the airline business, right? Why can't we do what we're talking about in Europe, which is actual wage supplement, or is that just socially unacceptable in Washington?
Well, there are a lot of proposals. The Republicans wanted another $425 billion that could go to a bunch of different businesses to try to keep people on the payroll. There wasn't enough transparency in that, in Democrats' view, and that would largely just put Mnuchin in charge.
Okay, come on. You sound like, Jack, you sound like you're from Washington. The bottom line is they wanted to fund $425 gazillion to suits and ties. How do they get money to people who aren't in suits and ties?
Unemployment insurance and the $1,200 or $1,500 payments. The issue maybe with that is we don't know if there would be a need for recurring payments because we don't know exactly how long this is going to go on. The expansion of unemployment insurance, I think, is supposed to be the more long-term recurring money in people's pockets.
Well said. Jack Fitzpatrick, thanks so much for your work on this. I really can't say enough about Kevin Cirilli and Jack Fitzpatrick and the others, the patience they've had in covering this over the last number of days. With their news, Michael Barr. Michael?
Thank you very much, Tom. Thank you very much, Paul. It is official. After months of internal discussions and mounting pressure from nations and athletes because of coronavirus, the International Olympic Committee will postpone the Summer Games that had been scheduled to begin in late July in Tokyo. Japanese Prime Minister Shinzo Abe made the announcement today. Top congressional and White House officials negotiating the nearly $2 trillion coronavirus rescue package say they expect to reach a deal today. Treasury Secretary Steve Mnuchin and Senate Democratic leader Chuck Schumer say they spoke by phone with President Donald Trump as they met late into the night at the Capitol. While the two sides have resolved many issues in the sweeping package, some disagreements remain. Washington has been straining to respond to the worsening coronavirus outbreak. Tempers in Congress have flared at times. Republican Senator John Kennedy of Louisiana.
You know what the American people are thinking right now, Mr. President? They're thinking that this country was founded by geniuses, but is being run by a bunch of idiots.
Millions of New York City residents are trying to adjust to new rules and how to adapt to a new reality. Mayor Bill de Blasio at a news conference last night said the coronavirus is spreading at a staggering rate.
I want people to understand that at this point, we're about 60% of the cases in New York State are here in our city. About 35% of the cases in the entire country are here in this city. We are the epicenter of this crisis.
There are more than 13,000 cases of COVID-19 in New York City alone. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. Dennis Gartman emailing in from Virginia. Good morning, Dennis. And Paul Sweeney emailing in on 2 amounts. He says this is the best of time for Duke basketball because there's like nothing going on for the rest of us.
Yeah, there's
nothing
going on.
Yeah, also, Paul, I would note gold up $102, 6.5% move. Gold $16.74 the ounce.
Yeah, that's a big move. And it had been selling off, Thomas. I think some margin calls were roiling the market. So not the typical relationships we've seen in the past.
Yeah, well, it's an interesting set of data checks. Karen Moscow giving you the best data checks worldwide. This is Bloomberg. Stay with us.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the in the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials. So taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Influential conversations from Bloomberg Television.
This is a message from the government and the NHS about how to protect yourself and others from coronavirus. Wash your hands more often than usual, for 20 seconds each time. Use soap and water or a hand sanitizer when you get home or arrive at work, when you blow your nose, sneeze or cough, and when you eat or handle food. For more information, go to nhs.uk/coronavirus. Protect yourself and others.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Apply by the 31st of March for a chance to win your first year in halls. Visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
A change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £22.95 a month. Join the Great British Broadband Switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. Source Ofcom fairer pricing. Price may change during your contract. See vodafone.co.uk/broadband.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures and European shares are rallying alongside Asian stocks as investors rediscover some appetite for risk after global equities hit their lowest level since 2016. The dollar is slumping following a 10-day winning streak, and treasuries are slipping. And contracts on the S&P 500, NASDAQ 100, and Dow Jones Industrial Average are limit up once again, with S&P futures up 113 points, Dow futures up 930, and NASDAQ futures up 375. The DAX in Germany is up 7%. 10-year Treasury down 15/30 seconds, yield 0.83%, and the yield on the 2-year 0.34%. 30-year yield 1.41%. NYMEX crude oil is up 2.8% or 66 cents at $24.02 a barrel. COMEX gold is up 6.4% or $101.30 at $16.7450 an ounce. The euro 1.0853 against the dollar, British pound 1.1784, and the yen 110.62, and the VIX this morning at 54.68. And that's a Bloomberg Business Flash. Tom and Paul.
Karen Moscow, thank you so much. Paul Sweeney and Tom Keene, thank you for being with us, folks, with certainly a better financial news day amid really difficult headlines in Madrid, in London, of course, with a lockdown in London, but difficult statistics out of Italy and Spain, and certainly some huge stresses in the United States of America as well. Right now, Barry Ritholtz with us. Barry, I have the advantage of a lovely view from where I live. And Barry, I know you've looked in each of these properties to move up in a Ritholtzian fashion. I'm looking at 432 Park Avenue, and then I look over and there's another tall Billionaire Rose skyscraper, and then another, and another, and another, and finally another, and I think there's 6 or 7 of these monstrous towers at the end of Central Park. Barry, those guys never get hammered in a crisis like this. Everybody listening to this show gets hammered. How do we recover? How do we go from where we were, it's diminished, and we want to start to get it back?
Wow, that's a really fascinating question. Let's start with the first part of it. Why don't those guys get hammered? Because they're making their purchases with cash, or if they're using credit, they have a near infinite supply of capital to pay it back. The rest of the world that levers up, and we certainly saw this in 2008-09, when there's a demand for a payment, when there is a margin call, that's how you get hammered. You get a forced liquidation, and usually at very disadvantaged prices. What you were just discussing with gold is a perfect example. People don't sell what they want, they sell what they can when they have to.
So, Barry, when you sit here and look at the action we've seen over the last several weeks here, what are you looking for to get a sense of, all right, I think the market's discounted pretty much everything we know here, and now I might pick up the phone and start talking to my clients about if you've got that liquidity in your market, in your account, now might be a time to start looking at some of the good names we like.
Well, first, we always look at the possibility of not using liquidity, but just using a regular rebalancing within a portfolio. Hey, when the market drops 35% and your bonds have rallied, pick a number, 4, 6, 8%, you're now overweighted one asset and underweighted the other. And so you could do that shift even if you don't have the liquidity. But a very important point that I think people are missing, when technicians look at charts, when we look at market action, we're really looking at 3 things. We're looking at price, we're looking at volume, and then what everyone seems to be forgetting, we're looking at time. And the fact that this has been the fastest collapse to 35% or 30% in history suggests to me that we haven't quite developed the true panic for a credible capitulation. Remember, we peaked in October 07, and it was 18 months later, March 09, when we had a capitulatory bottom. To imagine that this is going to be a V recovery in the markets or the economy, let's just say we don't see a whole lot of those throughout market history.
So as you sit here right now, again, looking at some of those, whether it's a V or a U, I was stunned to see some reports coming out of Wall Street over the weekend, particularly Goldman Sachs, which had a decided V look to it, minus 24% or something, some negative Q2 GDP contraction, but then bouncing back really sharply, double digits in Qs 3 and 4. You think they're being too optimistic?
Well, I hope they're right. Just 2 things to keep in mind. We have to be aware of what we don't actually know. We don't know how far this virus is going to spread. We don't know what the full infection rates or the total numbers are going to be. We really don't even know the mortality rates, which are probably overstated because lots of people who get it and then don't test or whatever. So everything is a little misleading. That said, tell me how long we're on lockdown. Tell me how long, how far this goes. Then we'll know what the recovery is. And P.S., let me remind everybody that despite a multi-trillion-dollar response from the Fed in 08-09, it took us nearly a decade to recover all the lost jobs. I'm hoping we don't go through that again.
Barry, I got a 90-second answer here for a short question. Would we be better now with all our social navel-gazing? Would we be better with defined benefit programs? Or are we better with ERISA 74 and defined contribution programs?
You know, defined benefits have become a luxury, and you see them in small, closely held companies or solo practices where the individuals are using it as a form of compensation, and it's a competitive advantage. Small, highly valued consultants and accounting firms and law firms and those sorts of things, medical practices. We even have some clients who do that who are in the film and television industry. They have a production company. But for a big company like a GM or a GE or, even a Google or a Facebook, the costs of that are just so exorbitant. And the question is, are companies responsible for labor's retirement? The compromise seems to be, hey, we'll give you a match on your 401k contributions, but it's up to you in the system, not up to us. That has some benefits if you have a good 401k plan, but most of the country does not. And we have, in the words of Charlie Ellis, a looming retirement crisis. That's 6 crises from now. We're not going to get to that anytime soon.
Yeah, but the crises only happen once in a lifetime. Barry Ritholtz, fortunately, Barry Ritholtz only speaks to us once in a lifetime. Of course, Barry Ritholtz of Bloomberg Opinion, and I can't say enough about Masters of Business's podcast and the rest. Paul, we got, futures are pretty darn good here. S&P futures up 113, the VIX in a solid 6 points.
Yeah, exactly, Tom. And, the real question here will be, can we hold it here? We've seen some of these little bear market rallies here kind of peter out. So I think clearly the market's really focused on Washington, D.C., Tom, to see if we can get some kind of action, quick action, get cash into the economy, into people's hands. That's what I think the market's looking for.
Yields higher, the 30-year bond, 1.43%. Looking also here at oil, West Texas, $24.40 a barrel, up $1. This is Bloomberg. Stay with us.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, earnings, but also with your business requirements. Command Financial, redefining financial printing.
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
Coronavirus is affecting us all. During this difficult time, we're helping critical workers to make essential journeys by public transport. So, from Monday the 23rd of March, TfL will be operating a gradually reduced service on our network. Some stations will be closed so that we can keep key stations open. Night Tube and Night Overground services have already stopped running, but our extensive night bus service will continue. The Waterloo and City line is now closed. We will keep you updated as our services change. Search TfL.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. Somehow, I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom. Which.co.uk. Our tests find you the best.
Broker Studio in New York. Bloomberg 1130. To Washington, D.C. Bloomberg 99.1. To Boston. Bloomberg 106.1. To San Francisco. Bloomberg 960. Country. Sirius XM Channel 119. And around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning, I'm Karen Moscow, along with Tom Keene and Paul Sweeney. And right now the S&P 500 is higher at the open. It's up 5%, up 112 points at 2350. Dow Jones Industrial Average up 5.8%, or 1,076 points at 19,680. And the Nasdaq's up about 5%, or 340 points at 7205. The 10-year Treasury down 18/32, yield 0.84%. The yield on the 2-year 0.34%. NYMEX crude oil is up 4.4%, up $1.03 at $24.39 a barrel. COMEX gold is up 6.3%, up $99.50 at $16.7220 an ounce. The euro 1.0842 against the dollar. British pound 1.1772, and the yen is at 110.91. Tom and Paul.
Karen, thank you so much. Again, a big lift there. Gold up $100. Get your attention. So much of this having to do with Washington. Look for all of our Bloomberg coverage out of Washington today and through the morning. Paul Sweeney and Tom Keene with us now. Gina Martin-Adams running all of equities for Bloomberg Intelligence. I guess, Gina, there can be only one question off the Intel headline of a while back, which is share buyback 101. How important are share buybacks to the long-term total return of this Lehman Low bull market?
So if you take share buybacks relative to their impact on EPS, they've absolutely had some impact. We got to a point where they were about 7% of the EPS growth. So the difference between EPS and net income was about 7 percentage points. That's all share buyback. So it has been somewhat important. I think going forward, you look for a couple of stories with share buyback. You've got the companies that have tremendous cash stores and are unlikely to experience a cash flow crunch, probably maintain their buybacks. The companies that are likely over-levered, already have cash flow issues, and are going to experience a bigger cash crunch will inevitably have to shave share buyback. I actually think companies have been really quick to suspend buyback, especially the financials companies. When we look across the companies that are already announcing buyback cuts, financials are actually some of the companies with the largest cash stores in the index, given the regulation following the great financial crisis. And yet they've suspended buybacks already, and they're kind of leading the charge on that to make sure that their cash flow issues don't crop up on them.
So, Gina, for those investors brave enough to look to the other side of this, where do you think they should look in various sectors out there?
Yeah, I think it depends on your time horizon. If you're looking to time the bottom and you're going to take a flyer on this is the absolute bottom, you start to look for some of the most beaten down entities of the index. In particular, you look at high volatility to lead recoveries. So some of the most volatile stocks tend to lead. I actually think cash in and of itself is something of an investment strategy as well. If you think about some of the companies that do have the most stable cash flow and some of the highest cash hoards relative to assets in the index, these are the companies that are likely to acquire some of the most beaten down companies across the index over time. So they likely experience stronger growth as a reflection of the fact that we've seen such a significant disruption. They can have the luxury of acquiring faster growth opportunities for some of the companies that may not survive otherwise through this cash flow crunch. So I think there are a couple of things, a couple of different strategies you can employ. A lot of it just depends upon your risk tolerance and your investment horizon, and whether or not you want to try to time a recovery, or you're more comfortable sort of sitting in less volatility.
What's the investment horizon to time the big bounce? Yeah. What's the investment horizon to get my retirement plan back in order? Those are two different things, aren't they?
Yes, they are two different things. I mean, when you look historically also, I think a couple of things are really important keeping in mind. Investors are right now entirely focused on the downside. And I think that is very key to kind of thinking about sentiment. When everyone else is focused only on the downside, you do want to start to incrementally thinking about, okay, well, where will things be 12, 18, 24 months from now? Who will survive this crisis, and who may even thrive in this crisis? When we look at sort of sequential impacts, everyone's focused on the economy. Frankly, the economy is the last thing to hit its low. First, index prices will hit their low. Then index earnings will hit their low, on average about 200 days after prices hit their low. Then the economy will finally hit its bottom. And I think that that's important to think about in sequencing. We're all completely obsessed with how deep the economic sort of decline becomes. But when you're thinking about how index prices behave, prices will hit their low well in advance of that index decline, and in some cases have done so a full year, or well in advance of the economic decline, and in some cases have done so a full year before the economy finally reaches its bottom. So you have to be somewhat opportunistic when you think about equities, and policymakers will make a big difference here. I think that's the other thing to really consider. We're all fading the policymaker action. We're all thinking, oh, it's never going to be enough. This crisis is different. What we wrote about yesterday is every crisis is different. Yeah. And every time the policymaker action comes right when sentiment is at its worst.
Gina, keep talking. We're up 1,278 Dow points. Paul.
So, Gina, that's kind of, given that domino effect you mentioned, the sequencing you mentioned, that brings to the fore, something we've been hearing about over the last couple of days in particular, which is, how do I recognize the bottom of the market? How do I recognize that capitulation day? Is it some combination of price movement and volume and all that kind of stuff?
Paul, the bottom in the market is when Afterthought stops playing Minecraft. Okay.
Yeah, I mean, it's a really great question, Paul, and we started talking last week about we think signs of a bottoming process are already underway. You get that massive VIX spike. We had a VIX spike to an all-time new high last week, and we have yet to reconfirm that spike. So that's one indication. You get to a point where less than 1% of stocks on the index are trading above their 50-day moving average. We also had that last week. You get to a point where policymakers are on a daily basis throwing everything they can at the crisis. Those type of things tend to happen at sentiment bottoms. Now, the question is, do sentiment bottoms always coincide with price bottoms? And the answer to that is, unfortunately, no. It's not always completely coincident. So you do have some risk of further price disruptions occurring over the course of the next 30, 60, maybe even 90 days, depending on how we start to price in economic disruption and our timeline for potential recovery and how that emerges. Though I will say that I do think a sentiment bottom is of consequence. What you want to find in price is rotation. The confirmation of a final bottom is rotation into much more highly volatile stocks, much riskier stocks, much less profitable stocks, lower growth, higher value stocks tend to lead recoveries. And those are the signs that we need to see in order to confirm that we are in a true bounce that is going to endure.
So, Gina, when you talk to institutional clients out there, what are they saying? Are they just in the hunker down mode, or are they really trying to, find the value, find the real opportunities?
I think there's still a lot of mixed responses out there. There are certainly some that are thinking about trying to be opportunistic, knowing that as a result of the equity market crash, portfolios are now out of balance, overbalanced toward bonds relative to equities. The long-term return potential of equities has improved significantly now that we've had a massive reset, yet there is still a lot of uncertainty. There's a lot of uncertainty as to the depth and the duration of this economic crisis. Analysts right now are forecasting that the second quarter will be an earnings bottom. I think the consensus is incrementally moving toward maybe the third quarter is actually the earnings bottom, and that's why we're having a hard time kind of finding our price recovery. There are mixed emotions regarding policymakers as well. I mean, some of the clients certainly side with me, suggesting that policymakers ultimately will get this right, and the effect of incredibly rapid response rates on the part of monetary and fiscal policymakers will be inflationary ultimately, will be recovery ultimately. But there are a lot that still really question, how long this is going to last. Is this an 18-month crisis we're now talking about as potential? People are bringing up depression. You've got lots of responses all across the spectrum.
Yeah. Has your actuarial assumption changed? I mean, with all this, Gina, it used to be 8% and then it was 6%. And, we've seen it creep down even from 6% to some unimaginably low numbers. Folks, that means longer savings to retirement. It means you got to sock more money away. With a shock like this, Gina, does the actuarial assumption shift?
I think a lot of it does depend upon time horizon. As you mentioned, how much more do you have to sock away? Do you have 40 years to retirement, or do you have 5? That makes a huge difference in your assumptions and your risk tolerance levels and your asset allocation perspective. Frankly, I think the fact that interest rates have been reset to all-time lows is ultimately incredibly supportive for the longer-term outlook for equities relative to bonds. But there's a tremendous amount of uncertainty with respect to how we can grow our way out of a crisis like this. And I think that we're going to continue to talk about this for the next year, frankly, is where are long-term growth assumptions now? I happen to think that long-term growth assumptions are built upon the back of demographics and cost of capital. So those things haven't changed. As a matter of fact, they incrementally will get better once we clear a lot of this leverage risk that everyone's quite worried about right now. But we're going to worry about this for the next 3 to 6 months, most likely, maybe even longer.
Paul, did you see how Gina didn't even miss a beat when she said you need a 40-year perspective? And I said, yep.
Yep, absolutely.
Right? Yep.
Tom, you and I are going to be working for a long time.
I'm loving that 40-year perspective. Folks, this is what happens when you miss the Lehman bull market with a triple leverage all-cash fund. Gina, thank you so much. Greatly appreciate it. And just terrific work. Read that, Bloomberg Intelligence. You can find it, of course, on the Bloomberg terminal. It is a stunningly beautiful day in New York. And now, right now, 9:41 Wall Street time. Let us go to the news. Here's Michael Barr.
Tom, Paul, thank you very much. Top congressional and White House officials negotiating the nearly $2 trillion coronavirus rescue package say they expect to reach a deal today. Meantime, President Trump is thinking about letting a 15-day shutdown expire next Monday. At least 16 states have imposed severe restrictions on daily life to prevent the spread of the coronavirus. Bloomberg's Martin DeCaro reports.
As the reality sets in that the number of confirmed COVID-19 cases is about to rapidly rise, governors are racing to impose measures to keep people away from one another.
This includes a ban on all gatherings and closures of many businesses.
Washington Governor Jay Inslee's stay-at-home order will be in force at least 2 weeks. In California, Governor Gavin Newsom is cutting off access to trails and beaches.
We are looking at the next 8 weeks, maybe the next 8 to 12 weeks.
The moves by the nation's governors are at odds with President Trump's stated goal to soon start sending Americans back to work against the advice of medical experts. In Washington, Martin DeCaro, Bloomberg Radio.
China is moving to revive its economy after shutdowns caused by the COVID-19 pandemic. Beijing is preparing to roll back restrictions placed on the central Chinese city where the virus emerged. Chinese officials announced today that they are prepared to lift the lockdown on the Wuhan area April 8th, ending the strict quarantine placed on the COVID-19 epicenter since late January. And Japanese officials say that the 2020 Tokyo Olympics are delayed for a year. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mike LaBar. This is Bloomberg, Tom.
Michael, thanks so much. SPX, let me give you levels there. 2358 on the S&P 500, up 122 points. The Dow level 19,755, up 1,163 points. NASDAQ 100 up 4.8%. The VIX comes in at ginormous 8 points. 53.88 on the VIX. Stay with us. Paul Sweeney and Tom Keene. This is Bloomberg.
This is Bloomberg Pursuit's look at luxury. Homeowners are still listing their multi-million-dollar mansions, often with prices that correspond to a booming housing market. One Massachusetts seller says the worst thing that happens is nobody buys it. Indeed, a faith in market despite the economic upheaval, a desire not to deviate from long-made plans, like listing in the spring, combined with low interest rates, all are giving homeowners the optimism they need. Coronavirus's spread hasn't deterred the seller of London's Westbury Hotel either, who's betting its prime location in the glitzy Mayfair district will lure buyers even as the global epidemic batters the tourism industry. Westbury owner Cola Holdings is pitching the portfolio of 3 adjoining properties, a Burberry store, and Washington House, home to the Conduit Club, as a once-in-a-generation chance to acquire a prime safe haven asset in one of the capital's choicest areas. It could bring in north of $1.3 billion. I'm Andrew O'Day, Bloomberg Radio.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
Japanese Prime Minister Shinzo Abe agrees to postpone the Summer Olympics in Tokyo. There has been pressure on Abe to make the move as at least 2 countries threaten to pull out. Steve Kastenbaum has the latest.
The reports emerged after the Prime Minister had a phone conversation with International Olympic Committee President Thomas Bach. Abe said the postponement is unavoidable if the 2020 Games cannot be held in a complete manner amid the coronavirus pandemic. Many countries had been pushing for a postponement. Canada said it would not send any athletes to the Games this summer, and different teams here in the U.S. were expressing reluctance to send their athletes.
Top congressional and White House officials negotiating the nearly $2 trillion coronavirus rescue package say they expect to reach a deal later today. The package includes help for American households and intends to bolster the healthcare system amid the growing crisis. I'm John Trout.
They don't just talk to the most important people.
Is it as ominous this time around?
They talk with the most interesting people.
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
Hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and we do have some breaking economic news crossing the Bloomberg. The U.S. March IHS Market Factory PMI coming in 49.2. That's the lowest since 2009. And the March IHS Market Services Index fell to a record low 39.1. U.S. stocks, meanwhile, rallying more than 5% as investors rediscover some appetite for risk as Congress appears close to an unprecedented spending bill to prop up the slumping economy. The dollar halting a 10-day rally. The S&P 500 is rebounding from the lowest level since 2016. It's currently up 5.6%, up 124 points at 2363. The Dow Jones Industrial Average up 6.5%, up 1,223 points. It's at 19,807, and the Nasdaq is up 5.2%, up 355 points at 7216. 10-year Treasury down 17 seconds, yield 0.84%. The yield on the 2-year 0.34%. NYMEX crude oil up 1.8%, up 40 cents at $23.77 a barrel. COMEX gold is up 6.1%, up $95.10 at $16.6740 an ounce. And the euro 1.0813 against the dollar, the yen at 110.90. That's a Bloomberg Business Flash. Tom and Paul.
Thank you so much, Karen. Greatly appreciate it. Without question, folks, the Bloomberg Surveillance interview of the day on this crisis. She is out of Northampton, Massachusetts, in Smith College, where she took a liking to the Krebs cycle and then had a sterling academic career in microbiology, including time at Columbia University, her Columbia University, and the University of Washington program, which is world-class. Angela Rasmussen joins us now. Angela, help me with the density of population, whether it is Italy or Wuhan or Brooklyn, New York. The density of population seems to be a determining factor.
Yeah, so viruses have to spread between people. Viruses can be picked up from the environment, but they generally don't last long on, say, surfaces, for example. So in general, when the population is more dense, you're at more risk of coming across somebody who is also infected who could possibly transmit a virus to you.
So, Angela, what have we learned from Wuhan and from northern Italy about the timeline here, flattening that curve? Where are we kind of here in the U.S. on that curve?
Well, it's very difficult to say because our testing capacity is not at the point where we can truly accurately determine the prevalence of SARS coronavirus 2 in our population. However, and I'm cautioning this by saying I'm not an epidemiologist, but all of the current epidemiological models that I've seen suggest that we're still on the uptick. Yeah. We can expect more cases.
I mean, this is so important, folks, and the FT and the New York Times have done great charts on this. And, Angela, they're log charts, and the answer is you want to bend the curve over, as Paul Sweeney says. The Asians have successfully done this, period. And in Europe, it's a struggle. What's so important is the slope of those trajectories. Our slope, Angela, is frightening. How do we bring that slope down?
Unfortunately, because we don't know the prevalence in our population very accurately right now, the only way to do that is by these large-scale, very, very strict social distancing measures.
Okay, then how do you respond? I don't mean to interrupt, but just because of time, Dr. Rasmussen, how do you respond to the president's 1 hour and 48-minute briefing yesterday, which was to get America back to work? How do you, as a grizzled pro, respond to that?
I was very concerned about that statement. I don't think that we're anywhere near the point where we can begin to say that. I think that it does need to be evaluated as we go along. I don't think, though, that it's safe to say that people can go back to work unless we can determine if they have been infected before and may have protective immunity.
So, Doctor, what is the sense of the treatment? How do you think the treatment will evolve over the next several months? Obviously, there's not a COVID-19 treatment, flu shot, for example, but how do you think the treatment will evolve?
I think if there is a treatment, and certainly some of the treatments that have been discussed, hydroxychloroquine, remdesivir, for example, are in clinical trials now. It's incumbent on us to complete those clinical trials as quickly as possible because having an available treatment that's effective could really dramatically change this for all of us.
So a sense of timing on that. I know it's, we usually kind of measure these things in years. Is there a possibility to compress that to months?
Yes, certainly. For chloroquine, hydroxychloroquine, and azithromycin, and remdesivir, those trials, I believe, are already ongoing. A trial has already been completed in China on 2 HIV drugs that unfortunately did not turn out to work. But since the remdesivir and chloroquine trials have also been going on, I think we can expect it to be a matter of weeks, 8 to 12 weeks is what I've heard, versus 6 months to a year.
So, Doctor, it's interesting, Tom. It's just kind of, we're still in that upward part of the curve here in the United States, certainly in New York City. So, Doctor,
I don't mean to interrupt, but thank you, John Tucker, for sending in this headline. Mr. Kudlow at the White House says, quote, may try to reopen parts of the economy around month's end. Dr. Rasmussen, what's that part of the economy going to be? Is it going to be that famous coffee house up in Northampton? Are they going to try to open the Iron Horse Cafe just to keep the economy going? I mean, what do they open?
That is an excellent question, and I have no idea. I do think that in many places, some of those service businesses and retail are still open. I know that not in New York and not in Seattle, where I'm calling from right now. But I really don't know what parts of the economy Mr. Kudlow is speaking of. I think, though, that indiscriminately opening up parts of the economy is a bad idea without further testing.
Thank you so much for being with us. Angela Rasmussen of Columbia University in Seattle, and of course, the University of Washington. Thank you so much for being with us today. We really having her on again. Paul, I love her clarity. I mean, those are just short, direct responses, maybe like we would have heard from Dr. Fauci yesterday, except he wasn't at the press briefing.
He was not there, so it turned into more of a promotional event. So that's going to be the push and pull, Tom, over the next days, weeks, months. Is how do you open up this economy, and how do you weigh that against the medical risk? I think Dr. Rasmussen, laid out pretty clearly.
Yeah, and I'll be honest. There's a dialogue of medical professionals, which is a little bit different. I don't mean to blame the president, but what we're hearing from everybody else. Well, I mean, I just don't understand how Duke gets their basketball season back together.
No, so it's everything's done, and so now you're even having people. Now we've had the news on the Olympics, Tom. So that was another big domino to fall. And now the question will be, the next one will be kind of like the NFL. Is that even going to happen?
That's good. I haven't thought a second about that, and that's where will Tom Brady play? I mean,
exactly. So in the Major League Baseball season. So these things that we like to think about, just to get away from some of the ugly news.
Paul, the Red Sox middle relief is so bad that we're not worried about this. Stay with us, folks. This is Bloomberg Radio. Good morning.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
Every sound, every voice, every note. Expect perfection. With Lynn products. 5 decades of innovation deliver that distinct Lynn sound, bringing you closer to your music and films. From turntables, loudspeakers, and streaming devices, you can guarantee Lynn to provide room-filling, amplifying, jaw-dropping sound that all becomes clear when you hear it. Beautiful listening experiences, hand-built by Lynn. Visit lynnproducts.co.uk to book your experience at one of our retailers. Or join us in Harrods in the 5th floor technology department.
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with little Rocky. Unfortunately, little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
Coronavirus is affecting us all. During this difficult time, we're helping critical workers to make essential journeys by public transport. So, from Monday the 23rd of March, TfL will be operating a gradually reduced service on our network. Some stations will be closed so that we can keep key stations open. Night tube and night overground services have already stopped running, but our extensive night bus service will continue. The Waterloo and City line is now closed. We will keep you updated as our services change. Search TfL.
A change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £22.95 a month. Join the Great British Broadband switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. Source Ofcom fairer pricing. Price may change during your contract. See vodafone.co.uk/broadband.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom. Which.co.uk. Our tests find you the best.
Financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at treasury bills, provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from New York City and parts beyond to our worldwide audience. Coming up, we have green on the screen. Rally day today in the financial markets as the markets look towards Washington, D.C. for some fiscal stimulus. We'll take a look at the new Fed facilities that were announced yesterday and see their impact on the financial markets. Plus, we're going to talk to our good friend Gary Schilling to discuss the Eurozone collapse. But first, let's go to Charlie Pellet for Bloomberg Business Flash. Charlie, what do you have?
Well, we've got another big day for the U.S. equity market here. Look at the Dow Jones Industrial Average up more than 1,100 points right now. That is a gain of 6.3%. S&P up 5.5%. NASDAQ surging 4.9%. 10-year yield 0.84%. This update brought to you by New Jersey Institute of Technology, transforming computing professionals into data scientists to meet demand in this fast-growing field. More at njit.edu/Jersey City. Stocks surging as investors rediscover some appetite for risk, with Congress looking close to an unprecedented spending bill to prop up the slumping economy. It is a fast-moving, developing story. Got to keep it locked into Bloomberg Radio for the very latest. S&P rebounding from the lowest level since 2016, poised to notch a third straight Tuesday turnaround after starting the week with a rout. Senators are negotiating the final sticking points in a roughly $2 trillion stimulus bill to help the U.S. economy get through the coronavirus pandemic. Well, one of the big questions in Washington is what kind of help the airline industry needs to get back on its feet. Bob Crandall is the former chairman and CEO of AMR, the parent of American Airlines. He was interviewed this morning on Bloomberg Surveillance.
I always thought we should have some version of regulation. I think we should now. I mean, look, we invested in the airline industry after 9/11. We're going to invest in the airline industry now. I don't think we ought to regulate it the way we used to. But I do think that if the public's going to make an investment in the airline industry, that it is entitled to know that the airline industry isn't going to turn around and lay off a lot of people while it's taking money from the public.
And again, S&P up 5.5%. That's a Bloomberg Business Flash. Lisa Brombowitz, back to you.
Thank you so much, Charlie. Let's take a listen. U.S. National Economic Council head Larry Kudlow, speaking to reporters outside of the White House about the response and the stimulus after the coronavirus-related shutdowns. Let's listen in.
Practically speaking, what can the federal government do to enable that? Because right now it's a lot of the governors at the state level who are putting in policies throughout their states. So practically speaking, what can the executive branch do to reopen the economy?
Guidance, probably the best way to put it at this stage, guidance. The governor's doing a great job, right? And, you know, Governor Cuomo in New York, my home place, badly hit by the virus. Who could have expected that? He's doing a great job. Gavin Newsom out in California. Yes, it's the governor's front. We can put out guidelines because that's, you know, we put out guidelines for the shut-in. And we don't exercise any monolithic authority, but guidance is very important. And we've taken emergency measures. So we're all working together on this. I have to be vague right now because this is just an idea that's beginning to build.
Is it worth opening up the economy at the expense of public health?
I don't see it that way. I think that public health includes economic health. That's the key point. And it's not either or. It's not either or. And that's why we're taking a fresh look at it. Just one more, and I got to get back in. Hello. Nice to see you. How are you? Good.
Do you have an update on what numbers you're expecting to see for GDP or even...
I've avoided that. I'll continue to avoid it. It's going to be rough. We know that. It's going to be a big challenge. I've been saying that for weeks and weeks. We will see. I'm going to leave it be. But I will say this. If we can get this package, we'll be setting the stage for a good rebound in the second half of the year. That's our thinking. That's why this package will undergird workers and families, Main Street, small businesses. The banks are in good shape, gratefully. So we'll see. But that's why we've got to keep those payrolls up and keep the small business in place to the best of our ability. That's why I need this package. Just vote on it. I mean, my message is please just vote it through. Get it done. Yes, ma'am. Didn't mean it.
What about the idea of letting people under 40 and in those younger age groups go back to work sooner? Is that under consideration? I
don't want to be specific. That's logical. You got some old codgers who are pretty healthy, too. I don't want to mention any names. I don't want to, outguess them. It's going to be their call. But I know that, sort of come back to your question that, good public health also requires a good economy. And each has its priorities. I get that. It's not either or. It is not either or. The two have to work together. Let me jump. I got to go.
Thanks, Larry. Have a good day. Thank you.
That was Larry Kudlow, director of the National Economic Council, speaking to reporters outside of the White House about the upcoming stimulus package that is expected out of Congress and the government response to the coronavirus. Right now, let's see where the action is in the equity markets with Bloomberg Stocks editor Dave Wilson. Dave, what do you have?
It's pretty much all over the place, Paul. I mean, you're really seeing the groups that have been hit the hardest over the past month or so leading the way back. The airlines, the casinos, the cruise lines. Norwegian actually has the biggest gain in the S&P 500 right now. It's up 30%, which is telling you something right there. You look at the energy stocks. I mean, given that crude oil's off its lows, we're seeing some pretty substantial gains in that group. Halliburton, for example, up 25%. You look at the biggest oil producers. You've got Chevron up about 17%. ConocoPhillips up 14%. I mean, there's a whole lot of gains. It's pretty difficult to find stocks that are down at this point, unless you want to look at Kroger, Clorox, Walmart, the kinds of shares they were holding up relatively well because we knew that that people were going to the stores and, stocking up, and these kinds of companies were the beneficiaries of that. So, that group's kind of backed off a bit. But other than that, I mean, you're talking 11 stocks in the S&P 500 lower at this point. So it's about as broad an advance as you can expect.
Yeah, and this comes on the heels of House Speaker Nancy Pelosi saying that she is optimistic that they can pass a deal within the next hours as far as getting a stimulus bill forward in short order. That plus the Fed stimulus seems to be giving a boost to markets. I am curious, though, about the dividend cuts, the share buybacks that people are not doing anymore. I'm talking about the energy majors and beyond. How much is that factoring into performance today?
Well, as far as today goes, it's not really the issue because this is very much a reaction to what we've seen over the past month. It's something you're going to have to look at down the line, though, because, you can argue that going back to 2009, one of the biggest sources of demand for stocks has been companies buying back their own shares. And a lot of that is going to go away as increasingly companies have to find new financing. They're not in a position to kind of take the cash that they're generating or to go out and borrow to buy back shares because, they've done both over the past several years. And just to put this in context, S&P Dow Jones is out with numbers today on fourth quarter buybacks. They're actually up 3% and change from the third quarter. And, you're talking $182 billion almost that companies spent on their shares in the fourth quarter of last year alone. So, a lot of that's going to dry up at this point, presumably.
Yeah, Dave Wilson, Bloomberg Stocks Editor, thank you so much for being with us. As always, not only are we getting a boost to equities, but also more stability with the dollar weakening a little bit after its incredible run. And the gold gaining, which is actually giving people comfort after all of those margin calls. Yields ticking up a little bit, but stability seems to be the tone in some of those key funding markets. Market Drivers is brought to you by Witham, a forward-thinking, technology-driven advisory and accounting firm helping clients be in a position of strength in today's modern business landscape. Visit witham.com to learn more. Now let's shift attention to Washington, D.C., where markets are squarely focused. Nathan Hager, what are you looking at?
Lisa, thank you. Among all the developments related to the coronavirus, you can add the 2020 Summer Olympics to the list of sporting events disrupted by the pandemic. Japanese Prime Minister Shinzo Abe has made it official, saying Japan and the IOC have agreed to delay the Tokyo Games for 1 year due to the outbreak. Abe insists the Games will not be canceled. Tokyo Governor Yuriko Koike says holding them next year will be a victory over the outbreak. The World Health Organization is warning the U.S. could become the new epicenter of the pandemic. The UN's health body says 40% of new COVID-19 cases over the last 24 hours came from the United States. The virus, the WHO says, has killed more people than Ebola did during its first 2 years. Treasury Secretary Steven Mnuchin is back on Capitol Hill, meeting with Senate Minority Leader Chuck Schumer on terms for a massive stimulus bill. In an interview with CNBC, House Speaker Nancy Pelosi said she is optimistic a deal can get done in the next few hours. West Virginia Democrat Joe Manchin tells CNN,
this bill didn't start out as bipartisan. It basically came all the way from Mitch McConnell and the White House dealing by themselves and then saying, okay, the last minute we'll give it to the Democrats and see what they have to say. Only thing that we had to say is, first of all, take care of the healthcare workers.
FEMA Administrator Peter Gaynor says the Trump administration will invoke the Defense Production Act for the first time today to secure 60,000 test kits and about 500 million masks.
We are absolutely ready to use the Defense Production Act. We just want to be careful that we don't do anything to put it out of balance and counter some other positive efforts that we see.
Gaynor spoke on ABC. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Two people who are as fascinated by the markets as you are.
What's your sense of the competitive landscape in the cloud business?
Lisa Abramowitz.
People were talking about potential regulatory pressure.
And Paul Sweeney.
Are you seeing flows into ESG ETFs?
Bloomberg Markets.
What's your main conversation today with some of these corporate executives?
Weekday mornings at 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Melissa from Michigan. I work an extra part-time job serving lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by Feeding America and the Ad Council.
The thing that I would say to anybody that was thinking about a job in social care is go for it. I'm Georgia. I love social care because you never know what each day will bring. It's emotional sometimes, highs and lows, but no 2 days are the same. I love the work, yeah. It makes me feel really good as a person. We make people smile every day.
If you want to make a difference to your life, care for someone else's, visit everydaysdifferent.com to find jobs in adult social care.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. Somehow, I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Witch Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom. Witch.co.uk. Our tests find you the best.
Mayday, Mayday, this is Red Dwarf. Our engines are dead and we're being sucked into a black hole. Can anyone hear me? Over? The only thing that's over is us, Crichton. We're finished.
Guys, relax. I've got smart breakdown with the AA. It sends them your vehicle's fault data, so they should know what's wrong before they even get here.
I don't believe it.
What, that they'll already know what's wrong?
No, that you're actually capable of something useful.
The future of breakdown today. The AA. Drive smart. See theaa.com for details.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Apply by the 31st of March for a chance to win your first year in halls. Visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Coming soon, Ricochet, the new action film written by, directed and starring Euro Millions winner Timothy Barker, with music by Timothy Barker.
Tonight's Euro Millions jackpot is a massive £15 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
Dave presents an evening of exclusive stand-up comedy in association with Calm, featuring Joel Dommett.
I was like, Dad, do you love my brother more than me? He went, I've just got more in common with him.
Kiri Pritchard McLean.
They're either holding an ugly baby or a heavy fish. I don't know why it's those two.
Judy Love.
Where's all my big girls? Okay, some of you been lying to yourself.
And John Robbins.
Never got my head round why 100% humidity wasn't water.
An exclusive stand-up special. Comedy against living miserably. Tonight at 9 on Dave.
It can be convincing when someone calls you pretending to be your bank. Especially when they say your money is at risk and you should transfer your funds into a safe account. Well, don't be fooled. At Lloyds Bank, we will never call and ask you to move your money into another account. We believe nothing is more important than our customers' trust. And together, we can keep your money safe. Lloyds Bank, by your side.
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is an update on Wall Street that is putting it mildly. Stocks are surging right now, looking at a 1,359-point gain in the Dow Jones Industrial Average, up now by 7.31%. We've got the S&P pushing higher, up 143 points. That is an advance of 6.4%. The NASDAQ Composite Index also advancing right now, up by 403 points. That is a gain right now of 5.8%. So a sharp turnaround from yesterday's sell-off. U.S. stocks rallying on optimism about some kind of a deal coming out of Washington. Stay with Bloomberg for the very latest. Indeed, fast-moving markets. Recapping on stocks, S&P up by 143 points. That's a gain of 6.41%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much, Charlie. There's a big question, and it has been underpinning a lot of the market activity over the past few weeks, and that is the Treasury market, this massive funding market, and frankly, offering benchmark rates for around the world, and it has been beset by incredible dysfunction. Ira Jersey has been covering it all. He's been covering it all for decades, back at Credit Suisse and beyond. Now he is our head of U.S. interest rate strategy at Bloomberg Intelligence. Ira, is the dysfunction over? And I think that this is sort of the key question as people look at the lack of liquidity in this key market as being unprecedented and highly disruptive regardless of what we see out of Washington, D.C.
Well, it's been better the last 24 hours for sure, but it's still very spotty. It's not what it used to be, and I think a big part of that is not necessarily because the Fed is buying a lot of bonds. In fact, I think that at some level that's helping at least a little bit, but I think it's just this lack of risk appetite, and like you mentioned, Lisa, there's going to be a lot more bonds to come. I mean, if even if there's a smaller fiscal stimulus plan, like closer to $1 trillion than to $2 trillion, you're still going to have a massive lack of tax receipts, for example, is going to be a big thing that you're going to see over the next couple of months at least. So there's going to be a lot more supply of treasuries over the next year, regardless of exactly how big the fiscal stimulus plan ultimately becomes.
Well, Ira, that's actually where I wanted to go. Okay, so we have some stability, still pockets of great illiquidity, but now the question shifts to financing this massive stimulus bill that we're expecting, especially without those tax receipts that you were talking about with the deadline pushed back to July. How is the government going to do this? We've heard something about a 20-year bond, about a 50-year bond, but ultimately, doesn't it come back to T-bill issuance in the short run just to stave off the cash deficit?
Yeah, that's 100% right. In fact, we put out a piece just this morning about that very thing, where basically T-bill issuance is probably going to go up. But I'm going to use this letter. Remember, it's trillion. Probably go up over $1 trillion over the next 6 months or so. And one of the reasons for that is twofold. One is it'll take a little bit of time for the Treasury Department to ramp up the amount of coupon issuance. So that's the amount of longer-term debt that they're going to issue. So they will be issuing a 20-year. They said that it's going to debut in May, and kind of just in time for a lot of this fiscal stimulus to be funded. I think that there's a chance that they might do a longer term, the 50-year ultra bond, but I still think there's a question about how much demand they'll have for that. So there's a 50-50 shot. But yes, there's likely to be maybe up to $3.5 trillion of T-bills outstanding. Now, what's interesting is even at those massive levels, that's about the same percentage of the Treasury market that there was back before 2007 when the Treasury Department reduced the amount of T-bills that it issued. So basically, you're going back to historical norms in terms of how much T-bills T-bills might be the size of the market. And I think that that's going to be something you're going to see. So anyone who really wants super safe assets can get them. What's neat about that now that the Treasury Department will like is T-bills right now in the short end, so 1 month and 3 month T-bills are trading at zero. So they don't yield anything. So, if there was a time to issue, short-term debt, it's now when you can basically fund it for free.
Ira, so in the Treasury market, the market participants say, hey, the Fed has done pretty much everything it can do, it needs to do, it should do. Now it's really up to Congress and the administration to really push on the pedal of fiscal stimulus.
Yeah, so fiscal stimulus is needed for two reasons. I mean, one is because the Federal Reserve is designed to kind of help market function and allow the financial institutions to be able to lend to other institutions, right? So that's the job of the Fed. By going in and doing some of the facilities like they are doing, like buying corporate credit, for example, it's not completely unprecedented, but it's pretty close, and that has to be backstopped by the federal government, because the Federal Reserve doesn't like to take credit risk. They basically make loans with big haircuts because they don't want to take credit losses. So fiscal stimulus needs to come to help like small and medium-sized businesses, where it's difficult for the Fed to go directly to those businesses and help. So the fact that they've announced that they want to do a facility through the SBA, through the Small Business Administration, to help those types of businesses, which the Federal Reserve can help fund, but ultimately it's a governmental organization that needs to really focus on that. And that's one of the reasons why we're looking at this fiscal stimulus plan to maybe even add more ammunition to what the Fed's been doing, and provide them more equity capital so they can even help more.
Just real quickly here, Ira, I'm looking right now at the Fed's balance sheet, which surged on March 18th last week to $4.67 trillion. How big is it going to get by the end of all of this?
So I'm actually looking at the spreadsheet right now that I've been working on. So I can't tell you the exact number, but I can say much, much larger.
Like double?
At least, yeah.
At least double. So in other words, you're expecting at least a $9 trillion Federal Reserve balance sheet by, say, this time next year?
That would not surprise me. Yeah, that's kind of in line with what we're talking about. I think a big part of that is what is the take-up of some of these new facilities. So even if the Federal Reserve, kind of slows down its purchases of mortgages and treasuries, which I think eventually it will do, is the SBA facility, for example, which is really where the pain point is in this whole mess with the social distancing. Is that going to get to $1 trillion or not? And that's going to be a big question.
Ira Jersey, thank you so much for joining us. We really appreciate your commentary here in what has been a very busy period in the U.S. Treasury markets. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us on the phone. Lisa, that was enough out of me, more than doubling, in terms of the balance sheet. Wow.
That means more than $9 trillion. That will be its balance sheet. And I believe that will be a hot potato political issue for a lot of people, and yet viewed as crucial in stabilizing the market right now.
Yeah, absolutely. And that market, a much stronger day today, Lisa, as we've been saying. The Dow up 7.8%. That's 1,400 points on the Dow. So, again, a risk-on day today as the market tries to price in where this is all going. This is Bloomberg.
This is a Bloomberg Money Minute. Stocks surging, rallying more than 5% as senators are negotiating the final sticking points in a roughly $2 trillion stimulus bill to help the economy get through the coronavirus pandemic. House Speaker Nancy Pelosi said she was hopeful a deal could be reached today. Car rental companies have begun laying off staff as the virus cripples air travel and demand for transportation. Hertz and Avis are trying to reduce costs during the crisis and are pressing lawmakers to add them to any federal aid program. Twitter is warning of difficult times ahead due to the effects of the coronavirus. It sees a loss for the first quarter, ending 9 straight profitable quarters. Twitter said the pandemic began to take a toll on ad revenue in the last few weeks. And Neiman Marcus is said to be talking to lenders about filing for bankruptcy. A Chapter 11 filing would allow the company to keep its doors open, cut its borrowings, and close weak stores to minimize costs. Courtney Donahoe, Bloomberg Radio.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man. your worst man. You, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its Prediabetes Awareness Partners. In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Coronavirus is affecting us all. During this difficult time, we're helping critical workers to make essential journeys by public transport. So, from Monday the 23rd of March, TfL will be operating a gradually reduced service on our network. Some stations will be closed so that we can keep key stations open. Night tube and night overground services have already stopped running, but our extensive night bus service will continue. The Waterloo and City line is now closed. We will keep you updated as our services change. Search TfL.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom. Which.co.uk. Our tests find you the best.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Apply by the 31st of March for a chance to win your first year in halls. Visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This ad is made from 100% recycled commercials. Just like Smart Water's
all new
bottles are made from
100% recycled
plastic.
What's that number again?
100%. Every Smart Water bottle is made using recycled plastic, and because it's still
100%
recyclable, the plastic will be used again
and again.
Smart Water, now in a 100% recycled plastic bottle. Label and cap 100% recyclable, but not made from recycled plastic. Yet. We're working on it.
Dave presents an evening of exclusive stand-up comedy in association with Calm, featuring Joel Dommett.
I was like, Dad, you love my brother more than me. He went, I've just got more in common with him.
Kiri Pritchard McLean.
They're either holding an ugly baby or a heavy fish. I don't know why it's those two.
Judy Love.
Where's all my big girls? Okay, some of you be lying to yourself.
And John Robbins.
Never got my head round why 100% humidity wasn't water.
An exclusive stand-up special. Comedy against living miserably. Tonight at 9 on Dave.
Heroes. They're the ones we look up to, or sometimes down at, if they're under your sink, mending a broken pipe. Whether it's plumbing to plastering, heating to electrics, at Local Heroes, every job completed by an expert tradesperson comes with a 12-month British Gas guarantee when you pay online. So, if it needs fixing, there's a local hero for that. To get a quote, search Local Heroes. Terms and conditions apply.
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up on Bloomberg Markets, a lot of people are already talking about what the economy will look like after COVID-19, some fundamental shifts. We'll be talking about the expectations of Gary Schilling coming up. Also, a look at the housing market. It is a growing number of funds that focus on mortgages run into trouble. Right now, though, let's get a check on the numbers. Charlie Pellet's got that for us. Charlie.
Hi, thank you very much, Lisa Abramowitz. Big numbers indeed. Let's get right to the numbers. I'll give you the story about the numbers in just a moment. The Dow up 1,333 points. That's a rally of 7.7%. S&P 500 index surging now by 153 points, up 6.9%, while NASDAQ rallying 420 points, up now by 6.1%. So stocks are surging as investors rediscover some appetite for risk on this Tuesday. Congress looking close to an unprecedented spending bill to prop up the slumping economy. Fast-moving developments out of Washington. So keep it locked into Bloomberg Radio for the very latest. Right now we've got the 10-year down 15-30 seconds yield, 0.83%. Gold is up now by 2.6%, up $41 the ounce at $15.94. West Texas Intermediate crude higher, little changed, up 5 cents right now, $23.41 a barrel. WTI up by just about 0.2%. Now, what about the economic outlook later in the year? Here's Larry Kudlow, White House economic advisor. He spoke with reporters moments ago. We heard it live here on Bloomberg Radio.
If we can get this package, we'll be setting the stage for a good rebound in the second half of the year. That's our thinking. That's what this package will undergird workers and families, Main Street, small businesses. The banks are in good shape, gratefully. So we'll see.
House Speaker Nancy Pelosi has said she is hopeful a deal can be reached today. Still, key gauges of American manufacturing and services in March fell the most on record, suggesting the deep toll the pandemic has already taken. We've got more on the economy coming up in just a moment with Gary Schilling. Recapping the equity numbers, S&P 500 index surging today up 158 points. That is a gain of 7.1%. Again, checking the 10-year, the yield now 0.82%. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. It is 10:33 on Wall Street. Time to check in with Bloomberg Opinion. We're joined by opinion columnist Gary Schilling. No better person here to chat to in terms of getting some long-term perspective on the U.S. economic condition and how it may fare given this coronavirus. Gary, thanks so much for joining us. We just heard Larry Kudlow make the comments that he believes, and the administration believes, that this stimulus package will set up the U.S. economy for a strong second half. Do you entertain that type of optimism?
No, I don't. I think the kind of disruptions we've had, people pulling their horns. You look at what happened after 9/11. I mean, it was over in a matter of minutes, but people worried about follow-on attacks and so on and so forth. I think this is going to have a decided impact on confidence of consumers and businesses in this country. And there are other important things too. I think that it's marking a further pull away from globalism. I had another Bloomberg column on that one, and the point is, with the disruption of supply chains and so on, I think this plays to the hands of people like Trump, who are very protectionist, the idea of more self-sufficiency, pulling away from globalism.
Dr. Schilling, Gary, it's wonderful having you because you have had a forecasting record like no other. And in 1969, you were one of the few people who thought that a recession would start late in the year. It did. Looking out now at the same type of foresight, I'm wondering, do you see a similar sort of downturn, protracted downturn, that monetary policy, fiscal policy just can't stop?
Yeah, I think that's the case. I mean, this is the big debate now. Do you have a V bottom? I think it may be more like an endless L. You have a decline and then a very slow recovery. Sure, you get the initial drop, a lot of money being put into people's hands, and low-income people will spend it. They spend at least 100% of their incomes. But other people, businesses, I think, are going to be a lot more cautious on this. And also to restart all these supply chains. I mean, China is, they're talking about people going back to work, but to get things reestablished, to get the supplies, supply chains are very intricate. You can have semiconductors produced in Korea. They go to Taiwan for final assembly, for sub-assembly, then to China to go into cell phones, and then they're exported to the U.S. You have all these supply chains, and it takes a long time to get those things reestablished.
So it's interesting, Gary, a lot of the Wall Street economists are kind of looking for that V-shaped recovery. So it'll be interesting to see whether that comes to fruition. Give us your sense of what you think the Fed has done. The Fed had a very busy day yesterday, really came on strong with more quantitative easing. Give us your thoughts on how you think the Fed is handling this.
Yeah, they used to call this pushing on a string. When you pull on a string, you get results. You tighten monetary policy, but when you push on a string, it just goes limp. And I think that's a situation. I mean, the Fed has basically made plenty of money available, and the question is, it isn't so much a question of liquidity as a question of solvency, and the question of who wants to borrow, who wants to spend. So you really shift over to fiscal policy as having to carry the water. The Fed is just. I mean, they've done virtually everything they can except literally dump money out of helicopters.
Yeah. Well, and given the fact that you have served on the staffs at the San Francisco Fed, Bank of America, I'm wondering how concerned you are about the idea of the Ira Jersey was just talking about that the Fed's balance sheet could climb beyond $9 trillion in short order here.
Well, the thing is that people have gotten very callous to this. You used to have a big concern. You go back to the days of Paul Ryan and the sequestering, the idea that big deficits, big monetary ease would result in inflation and higher interest rates. Well, of course, what's happened is you've had these deficits now $1 trillion and headed much, much higher with the reaction of the coronavirus, and interest rates have come down. So they call that modern monetary theory. Theory follows fact. You have the facts, you dream up a theory to make them. So there's literally no concern about deficits. And right now, the world is lusting for dollars.
Yeah.
That's why you saw the strength in the dollar. You're seeing the strength in treasuries. This is where people want to be. These are the safe havens. And also, I think with the prospects of lower inflation, even deflation, you have less reason to worry about deficits and Federal Reserve action.
Gary Schilling, thank you so much. Too short. Unfortunately, we have to go, but I could speak with you all afternoon. Gary Schilling is the president of A. Gary Schilling & Co., also a Bloomberg opinion columnist, joining us today. Right now, let's head down to our 99.1 studios. Nathan Hager there, actually probably at home, Nathan. Is that where you are?
Yeah. Oh, we're doing what we can. Thank you, Lisa. House Speaker Nancy Pelosi says she's optimistic it can get done today. Senate Majority Leader Mitch McConnell says it's on the 5-yard line. They are talking about a roughly $2 trillion stimulus bill that has been under negotiations for days, but lawmakers are sounding more optimistic they can get it done today. President Trump is adding his 2 cents on Twitter, saying people want to return to work and can still practice social distancing, reiterating the 2 things at once message he put out at a White House press briefing last night.
We're talking about economic, where you really hurt a country. It could take years and years to recover. And the longer you stay out, the harder it is to recover.
But even if the president wanted to reopen the country, Bloomberg's Amy Morris reports states could go their own way.
Actions by the governors to ban gatherings, keep schools shuttered, and close non-essential business show that even if the president does relax the recommendations, states won't necessarily follow. The president's concerned about the economic impact. We're already seeing a surge in unemployment claims. But the president does not have direct power to order sectors of the economy back to work. That is the purview of the governors, who are issuing their own directives beyond federal recommendations. In Washington, I'm Amy Morris, Bloomberg Radio.
This red headline just cross the Bloomberg terminal. India's Prime Minister Narendra Modi is imposing a nationwide lockdown on his country effective midnight local time and lasting 3 weeks due to COVID-19. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to
3 is a magic number. 300 schemes to help bugs and bees, supporting environmental needs. 8,000 grants for local sports and performing arts get our support. 7 millionaires every week. The nation's on a winning streak. 30 million pounds to good causes every week. Who'd have thought it? These are magic numbers.
Your numbers make amazing happen. The National Lottery.
Rules and procedures apply. Players must be 16 or over. Coronavirus is affecting us all. During this difficult time, we're helping critical workers to make essential journeys by public transport. So, from Monday the 23rd of March, TfL will be operating a gradually reduced service on our network. Some stations will be closed so that we can keep key stations open. Night tube and night overground services have already stopped running, but our extensive night bus service will continue. The Waterloo and City line is now closed. We will keep you updated as our services change. Search TfL.
The World Health Organization recommends that you do these 5 simple things to help stop coronavirus. Do the 5. Number 1, hands. Wash them often. 2, elbow. Cough into it. 3, face. Don't touch it. 4, feet. Stay more than 3 feet apart. And 5, feel sick? Stay home.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
This week on the New Yorker Radio Hour, we're taking a deep look at the way the coronavirus pandemic has rippled through every aspect of our lives, seemingly in a matter of days and weeks. Whether you're working from home, not working, or have to go to work, COVID-19 has changed everything. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
It's TuneIn Sports on this day. March 24th, 2019, two-time American League MVP Mike Trout signs the biggest contract in North American sports history, a $426.5 million 12-year extension with the Los Angeles Angels.
You know, when it came down to it, it was about, family. And I just, seeing everybody and knowing that I'll be here, for a long time, and it means a lot.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Imagine being fired because of who you love. Imagine being denied medical treatment because of who you marry. Imagine being evicted because of who you are. Millions of Americans don't have to imagine this. They have to live it. Because in 31 states, it's legal to discriminate against LGBT people. Get the facts at beyondido.org. Brought to you by the Gill Foundation and the Ad Council.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, President of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks holding on to their gains with the Dow, the S&P, and NASDAQ all surging by 5.8% or better. NASDAQ up now by 400 points. That is a gain of 5.85%. S&P 500 index up 152 points. That's an advance of 6.8%. Dow Jones Industrial Average now at 20,007. It is up by 1,410 points. That is a gain of 7.5%. Stocks are surging as investors rediscover some appetite for risk, with Congress looking close to an unprecedented spending bill to prop up the slumping economy. Stay with Bloomberg for the very latest developments out of Washington. The 10-year down 12.30 seconds. The yield on the 10-year now 0.82%. Gold is up 3%, surging $46 the ounce at $15.99. West Texas Intermediate crude higher, little changed, up 2 cents right now, $23.38 for a barrel of West Texas Intermediate crude. Recapping, rally underway right now. S&P rebounding from the lowest level since 2016, up 148 points, up 6.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much for that. We look at some of the stability that we're seeing in certain markets and the surge in U.S. equities, and there is still a huge question mark around the mortgage market. Really a huge pain as we see funds, including Invesco Mortgage Capital, the latest, saying that they are unable to meet margin calls